football talk.
No, he's actually crying for another reason when he hears me talk about football. It is notable, though, to see these underdogs come out and really push.
It's notable that on global television for Global Wall Street, two people completely unqualified are going at it. We're qualified to give you a data check. Futures up 2, the VIX 22.53. If you're brave, stay with us.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. U.S. prosecutors had begun an investigation of FTX months before the crypto exchange collapsed. Bloomberg's learned that prosecutors in New York had started poking into FTX's massive exchange operations. It was part of a sweeping examination of cryptocurrency platforms with U.S. and offshore arms. U.S. Defense Secretary Lloyd Austin is urging China to avoid what he called destabilizing actions toward Taiwan. Austin met with his Chinese counterpart in Cambodia, their first face-to-face meeting since House Speaker Nancy Pelosi's visit to Taiwan in August. It's the latest effort to put the U.S.-China relationship on a more stable footing. The European Union's executive is designing an emergency natural gas price cap. Now, it's trying to avoid the kind of record high seen in August without risking the security of supplies. The European Commission will discuss the final shape of the so-called market correction mechanism today. And China reportedly is set to fine Jack Ma's Ant Group more than $1 billion. According to Reuters, that would pave the way for the end of a regulatory overhaul of the fintech firm. Beijing's crackdown on the private sector included the halt of Ant's massive IPO in 2020. At the World Cup, England, Argentina, and the Netherlands all won their first matches. Meanwhile, the U.S. and Wales battled to a 1-1 tie. England and the U.S. square off on Friday. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
politics to the world of business. Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
As we work to bring policy to what we call a sufficiently restrictive stance, which really in simple terms means the level required to bring inflation down and restore price stability, we will need to be mindful. Adjusting too little will leave inflation too high, and adjusting too much could lead to an unnecessarily painful downturn.
Mary Daly of San Francisco, can't say enough about it. There were some real terse comments here about the social consequences of how the Fed dances to December 14th and into the next year as well. It is the Tuesday before Thanksgiving. We're not struggling for news flow, and the news flow today is really about Bitcoin. The weight on Genesis. Sonali Basak, I thought, was wonderful here half an hour ago, 15,700 on Bitcoin. I usually don't quote that, but today it is front and center. A churn to the markets, inequities, a churn to the market. Bonds yields come in a little bit after the quiet of yesterday. Oil with a lift here. We'll get to that in a moment. Brent crude 88.59 dashes again to 90. I'm struggling here, Lisa. What I'm not struggling with is to understand food, because Javier Blas has done terrific work at Bloomberg. The core commodities really aren't up all that much. And yet Lisa and I know that when I'm preparing to do stuffing in aisle 7 at the store, that it's really expensive. And you did the work on this as well.
Hold on a second, just surveillance correction. You are not preparing to make stuffing. You haven't prepared to make stuffing for the past 2 decades. But we will pretend that we are both trying to cook, because I can't cook either, let's be honest. But for those who do...
My stuffing tastes like diesel fuel, which is what this is really about, isn't it?
Well, that's exactly right. Diesel fuel also in short supply. Stuffing mix, year over year, increased 69%. Everything having to do with wheat is more expensive. And if you take a look at the Farm Bureau, they did a study, and it shows that Thanksgiving dinner is up 20% year over year, which raises a question of how much further it can go, how sustainable this is, and why. Kona Hack, covering all things having to do with Thanksgiving dinner. Perhaps she makes stuffing better than I do, because I cannot make stuffing. Head of research at ED&F Man. Kona, what's behind this incredible lift across the board in food prices, particularly when it has to do with wheat?
Yeah, I think it does boil down to the Ukraine invasion. We do know that the Black Sea, which is essentially Ukraine and Russia, they account for a quarter of all wheat exports globally. So the fact that for a long time, at the beginning of this year, exports out of this region was blocked, that caused havoc, absolute havoc. And it came at a time when there was dry weather issues in other key wheat producing regions around the world. You name it, there was Europe, there was parts of the US. So I think we had a big shortage, and globally stocks were at levels which you hadn't seen for a long time. It was very uncomfortable. So I think you're just seeing that reverberating across, commodities across the food chain have been very, very tight. And on top of that, the cost of shipping that stuff, the freight, has been extortionate too. So it's all leading to the food basket, which is ultimately today so much more expensive for the average shopper.
And Tom was talking about diesel and how that really is behind this. And that really speaks to the shipping story, the idea that even transporting the food is getting more expensive. Are there any signs of disinflation, of some sort of relieving of this pressure in the near future, or is it more of the same and even then some?
So diesel is absolutely critically tight right now. I think Russia is a massive exporter of diesel to Europe, and there seems to be critically low levels of diesel stocks around the world. But just going back to the food itself, what I would notice is that the United Nations FAO Food Price Index, that actually peaked in March. Yes, it was at record high levels at that point in March 2023, but since then it has been steadily coming off. Now, that's at the absolute futures price level when prices are at those highs. It takes a time for it to filter down to the supply chain and ultimately to the retailer. So that's going to take a while to filter through. But I would say prices have peaked. One thing about agricultural commodities is that farmers are very responsive. So when you do see high wheat prices, farmers will do everything to plant more of that crop. As long as weather's permitting, they will plant more of that as soon as the next harvest.
Kun, I've been dying to talk to you, and this is the global reach of ED&F Man, and that is, if China extricates itself from its misery and we get a Pacific Rim restart, or dare I say boom, what does that do to the Konahik world?
So that is the big story, if you like, that commodities are desperate to look forward to. It really will have an impact. And every time, when rumors were coming out that China's about to lift its COVID zero policy, or even going some way towards addressing some of that, commodities have been rallying. So it really is the one thing that can really help things take off. I don't think that's going to happen until Q2 of 2023 at the earliest. And we've seen actually an exponential increase in cases most recently. So that's causing short-term damage. But yeah, the hope that they will eventually open up, we'll see what we saw in Europe and America, where pent-up demand for going out, eating out, restaurants, things that you couldn't do in lockdown, we'll definitely see a short-term bounce. But you have to remember one thing about China. The structural story is that China is no longer as commodity intensive and hungry as it was, say, a decade ago. So the drive will not be as extensive. There will certainly be a short-term bounce, and that'll be very beneficial, but it will not be long-lasting, unfortunately.
Konahik, thank you so much. Greatly appreciate it this morning with ED&F Man. I want to squeeze one more question. They're always informative, but we just can't do it this morning. Just really interesting there in food. We make jokes about this, but this is real hardship. I mean, I remember I did a whole thing on rice for Bloomberg on the Economy, Lisa, years ago, and it was the cost of food in America, I can't remember what the number is, 8, 9, 10%. And in Cambodia, the cost of food is 60 and 70% of the paycheck. We make jokes about it, but even in America, the percentage of people flat on their backs from this food inflation is arguably, to me, bigger than the gallon of gas inflation that's out there.
And you're seeing that in terms of discretionary spending and in terms of consumer sentiment, how much that's deteriorating into the winter months. I do wonder, when you talk about whether this is supply side driven or demand side driven inflation, what rate hikes are going to do? Right? I mean, this is the question. If we don't necessarily get some sort of increase in the production of oil, what does rate hikes do other than make it more difficult for people who are at the lowest deciles of their income sphere to be able to afford it? I don't know. These are some of the things that I expect that we'll keep hearing from Fed officials. And we heard also overnight from ECB members as well.
Well, I like what Mary Daly said, and she's always had a real focus on the broader America, as have all the other Fed officials. And if you want to see it in Turkey, what's a butterball cost at the store? I don't even know.
I just know that
15,
I can give you the
bucks.
statistics from Farm Bureau because that's what's up in front of me right now.
There we
Turkey is $28.96 for a 16-pound turkey, which is an increase of 21% year over year.
Diartigan, which is just phenomenal, like fancy turkey stuff, the wild turkey's $95.99 for one bird. And that's the sprawl of America. We spend too much time talking to people spending $70 on a beast, and there's a whole bunch of people out there looking at 30, you said?
Well, but how many of the people who previously were looking at 70 are going to 30, which is the reason why Walmart perhaps gained share, with people perhaps migrating lower in terms of the price savings?
Just in, Pharaoh cooking for Thanksgiving. Can you see? Yeah, can you see him? I can see John, basting the beast.
Lemon gelato for dessert. And,
actually, that would be good.
Yes.
That would be better than what I'm going to do.
What are you going to do?
Bitcoin up. I'm going to survive Bitcoin. This is Bloomberg. Good morning.
The NEC was started under President Clinton, and Bob Rubin was the first person to hold that job. Can you explain to people what it actually does and what the NEC does day to day? When, for example, who's in the NEC, who's on the NEC, what is your job actually to do?
So the National Economic Council, the job, the mandate, the mission of the organization is to coordinate economic policy across the executive branch and across the cabinet to make sure that the president is getting the benefit of when making decisions of his entire economic cabinet, and also that the economic cabinet is getting clear direction from the president as well. So that two ways. So it's a coordination function. On the NEC itself are all of the relevant cabinet members, the sort of core economic team, OMB, Council of Economic Advisors, Treasury, but also Secretary of Labor, Secretary of Commerce. My team, the NEC team, is a small team within the White House that is, our job is to do that coordination across the range of economic policy issues.
Now, you were the deputy in the Obama administration at the NEC, now you're the director. Which NEC worked better, the Obama administration one or the Biden one?
Well, on the issues that I worked on in the Obama administration, it worked very, very well. And the current NEC works very well as well.
There's this downside of where we are, but there's also this incredible upside. People are chasing fusion. They're chasing green, blue hydrogen. They're chasing battery storage. Something's going to break through.
Bloomberg, your global business authority. Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect. How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg. A multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg.
We're going through an inflection point right now, like we saw earlier this summer.
The economy's rolling over, the data's rolling over, and as hawkish as the Fed wants to talk, the markets are starting not to listen to it.
We don't really know how far and how fast inflation will fall.
A lot depends on what the Fed does. If the Fed slows down their very rapid rate of increase, will that allow us to avoid a recession?
We're still going to get a recession at some point, although maybe not right away.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on a Tuesday before Thanksgiving. Yes, it is quieter, but it is not. In this hour, in moments, what do you do for 2023? We'll dive into that with a cautious view with Wells Fargo. John Farrow on assignment right now with Argentina, stunningly on the edge of losing to Saudi Arabia. Mr. Farrow will report on that through his our inner messaging system as well. Lisa, all the news today, it's really sort of comforting to get back with Tracy McMillian, back to like, what do we do for 2023? Right. Away from Disney blowing up or Bitcoin blowing up.
Well, the problem is that we have to get through Bitcoin blowing up or Disney having a huge management shift in order to get to 2023, and nobody can really game out how that's going to go. I mean, the one consensus that you're feeling in 2023 is, and I love how George Saravellos put this yesterday, it's unlikely that so many bad things can happen all at once the way that it did in 2022.
And what's interesting here is the rare optimistic call. There are people out there looking for a constructive 2023, buttressed up against OECD this morning, folks. And all you need to know is the migration on real GDP growth is Bank of England-like. And the migration of inflation doesn't get it down to 6.8% global inflation next year. All of a sudden, you and I are looking out to 2025.
Yeah, hiking into weakness, saying that there's a need to really keep hiking in order to crimp some of the demand and get inflation down. You're talking about bears, right? I'm going to throw out one that's sort of notable. Marco Kalanovic over at JP Morgan, almost full capitulation here, basically saying that the only way to have a sustained rally in asset prices is for the Fed to start cutting rates, and he doesn't see that happening in the near term. This is somebody who has been a perma-bull for so much of the cycle, basically coming out and saying, I'm done. It doesn't seem like it's in the cards right now.
Well, we're going to see that. We're going to see a lot of 2023 resets. We're going to do that with Wells Fargo here in a moment. But my reset is just there's mass uncertainty. Let's talk about Bitcoin this morning. This is the lead story this morning, advanced by Lydia Bayoud and Sonali Basak and company at Bloomberg. On Genesis, Genesis is not FTX, right?
It's considered to be perhaps a little bit more with respect to institutional money. It's the Winklevoss twins. It's a lot of people who thought of this as much more stable
coin.
Whoa,
I love it.
Look at this. It's almost like we're on the same page.
I have no idea what stable coin is.
Well, we could discuss that another time. There is a bigger question here, which is where are we in the fallout of the crypto turmoil? Sonali Basak saying we're in the middle of it. How much more do we have to see, and how much is this a symptom of what we've seen in terms of the withdrawal of easy money?
Stay with us through the day, and I believe, correct me wrong, Amy, on this if I am wrong, but we have crypto this afternoon where we'll really dive into this with a complete effort. We're going to look forward to that.
She says you're correct.
Television this morning. Am I correct?
You're right.
She just talks to you. She doesn't talk to me. What can I say? Futures up 4, Dow futures up 44. Bonds, there's movement today after yesterday's quietude. Yields come in a little bit. 5%. We were looking for the 2-year yield to get out there. It did not. 4.50% on the 2-year. 10-year yield 3.79% as well. 2s gives me nothing. And the real yield in a little bit, 1.46% on the real yield. Oil with a lift, 88.71 on European Brent crude, global Brent crude, back towards $90, and dollar churning today is not much of a story. I demand a pre-Thanksgiving brief.
All right.
With Lisa Brown.
Fine, if you insist. Let's talk about what we're looking at today, including a slew of earnings. We already got some of them, including Burlington Stores, Dick's Sporting Goods coming out. Dollar Tree is what I am watching. How much do you see an ongoing flight to some of these discounters because of this feeling that people want to downshift, given the fact that Dollar Tree is up more than 24% so far this year? Just this is the winners that tend to emerge during downturns or soft patches in the economy. Today, the Fed Speak includes Cleveland Fed President Loretta Mester, Kansas City Fed President Esther George, and St. Louis Fed President Jim Bullard. Do we get a shift in tone? Do you start to hear about concerns about the lag effects? And that's something that sort of people touched on yesterday.
And last hour I didn't talk about this. And keep this up on television and radio. We're looking at the 3 mugs of Mester, George, and Bullard. And this is the strength of the Federal Reserve System. We're down on Madison Avenue. The country went broke in 1907. And in 12, we started the Fed Reserve, modernized in 1951. And the heart of it is the regional presidents are different and independent. And what I love about what you're saying, Lisa, these are 3 starkly different voices today.
And the one consistency is inflation is the first and foremost concern, and that rates are going to go higher before they hold put. At 1 p.m., we get an auction. U.S. is planning to sell $35 billion of 7-year notes. These tend to be difficult auctions because they are less liquid than other parts of the curve. The yields are higher, 3.89%. What is the demand like? I mean, it just gives you a sense of where we have been, considering the fact that we were near zero not so long ago. Going up almost 4 percentage points is sort of shocking.
And now the dumb question of the day, is there tax loss selling in bonds?
Not to the same degree as stocks. Okay. So it's not going to be affected in that kind of manner, especially because there's a huge international investor
We
base.
do lots of fancy stuff here on equities, bonds, currencies, commodities, but part of it is to get back to basics. Tracy McMillian is in charge of basics at Wells Fargo Investment Institute, is head of global asset allocation strategy. Tracy, let's get out front of your view next year. What do you see for use of cash in 2023?
Sure. So good morning, Tom, and thank you for having me. So for 2023, we're actually seeing equity markets move higher, but it's going to be a really tricky path to get there because the Fed is likely to be, under 3 different regimes as we move into 2023. We start the year with them continuing to tighten. Then we think we're going to see a pause. And then we think by the end of the year, they're going to be cutting rates as we move through a moderate recession. So we think the markets are going to be looking out to 2024 by that point. and we see about 10% upside from here. So we would cautiously be dollar cost averaging into equities. We're also starting to take a little bit of risk in fixed income by moving out in duration.
Tracy, how concerned are your clients right now? How much fear is there?
So there's some fear, but I would say with relation to other downturns, the 2008, 2009 financial crisis, even the pandemic, we're not seeing the same level of fear at this point. Now, that doesn't mean we won't see that eventual fear and capitulation that we do tend to see during bear markets, but this has been a really well telegraphed bear market, and it's been very orderly so far. So we really haven't seen that kind of fear from our clients that we typically see during a bear market.
We're going to hear from a host of Fed speakers. Later this month, we are going to hear from Fed Chair Jay Powell, I believe on November 30th, at a Brookings conference. What are you looking for to understand what the pivot point will be in terms of not just pausing rates, but actually starting to cut?
Sure. So what we're looking for is inflation to start to come off the boil. And we're starting to see that with the latest inflation data. We're starting to see it in goods data, maybe not so much, at least from the CPI in terms of services. And that's the services inflation is really beholden to this tight labor market. So we're watching the same things the Fed is watching. We're watching inflation data and we're watching the labor market data. And it's really going to take both of those cooling before we think the Fed will start to cut rates again.
Tracy McMillian, thank you so much with Wells Fargo. Greatly appreciated this morning. It's these the stories for 2023. And, you know, I'm going to give John major credit on this. In that I think it was 3 years ago where John coined the idea that the outlook for a given year starts in March because there's just so much uncertainty. Now, all the confidence is gone.
But how much is it reset in March, then reset again in June, then reset again in September? I mean, it's
pandemic,
a quarterly annual
but this is
report.
pre-pandemic that he. I mean, I remember. You know, I can't remember the ad slogan. We believe.
Well,
there was always with his voice and someone with a bow tie.
Okay,
we would suggest.
It's a problem because the market tries to get ahead of everything. So they try to game out the entire year in the first quarter. And then you have to reset and go to the next year that's jammed into another couple months.
I would suggest what we haven't talked enough about, and I give the whole show, our team and everyone credit for this, Lisa, is your world. When we cavalierly say bonds are down 15% in price, you can use the word never. We've never seen this. And grizzled veterans who remember 78, 79, that was a walk in the park compared to the rationalizations at 12/31/22 that are going to be made among old and quiet money.
It's been the worst year on record for benchmark treasuries. This is the way of saying it. I mean, when you take a look at benchmark bond indexes and see them in a bear market, this is unheard of, right? And so this is the reason why sometimes you're a bit skeptical of the incredible optimism that people have about bonds next year. They say, well, this is the time to buy. It's a great time for bonds. And you're like, really? You guys just suffered the worst losses ever in your existence. How much, though, have we seen the fallout from this? And this is what, when you say my world, is it possible to have the benchmark full faith and credit safest instrument get totally blown out and not see anything blow up?
The great David Goldman, who was at Bank of America, wrote a chapter in my book years ago precisely on this, and that the mistake is to watch the doom and gloom tranches. And Margie Patel yesterday agreed with Mr. Goldman that you watch quality out there to see what it does. The quality's pulled back 15%, and you see if that recovers here. There's a bet on that, wouldn't you say?
There, a lot of people are betting on that pretty vociferously, saying that next year is going to be the best year for a long time in a lot of these credit
We've heard that before. Break exclusive, surveillance break exclusive. My bracket has been blown up. I am so done. We're like a day and a half into the World Cup.
You were all
a day
in
and
Argentina?
a third. I was all Argentina. I am so gone. Saudi Arabia, stunning Argentina. Stay with us. Jens Nordvig's watching Denmark. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Digital asset brokerage Genesis is warning potential investors it may have to file for bankruptcy unless it can raise money. Bloomberg's learned the firm is struggling to attract funding for its lending unit, which suspended withdrawals after the collapse of FTX. Genesis has spent the last few days seeking at least $1 billion in new capital. In China, an increase in COVID cases has led local authorities into reintroducing measures like expanding testing and lockdowns. It's now estimated that a fifth of the country's economy has been affected. That's despite the central government's call for more targeted, less disruptive COVID-0 measures. The European Union's executive is designing an emergency natural gas price cap. It's trying to avoid the kind of record high seen in August without risking the security of supplies. The European Commission will discuss the final shape of the so-called market correction mechanism today. Bob Iger will be paid about $27 million annually to return as the CEO of Walt Disney. The 2-year deal includes a base salary of $1 million and a bonus equal to that amount, as well as stock awards with a target value of $25 million each year. The amount is actually lower than past packages. Former CEO Bob Chapek received $32.5 million in fiscal 2021, and Iger, who was chairman at the time, received just over $45 million. The richest person in the world has seen his fortune decline by more than $100 billion this year. According to the Bloomberg Billionaires Index, Elon Musk's wealth has fallen to a little less than $170 billion after Monday's $8.6 billion loss. His stake in electric car maker Tesla comprises the bulk of Musk's fortune. Those shares have fallen about 52% this year. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Lisa Mateo. This is Bloomberg.
What are the biggest challenges for General Dynamics and what are the biggest opportunities?
So I think in any business, the challenges are solving complex problems that come to you. You know, the problems that come to me and my senior leadership team for resolving tend to be highly complex and nettlesome. So your ability to solve those complex problems are an important element, I think, of the value that we add to the company. And then I think opportunities, you always want to make sure that you've got a creative enough mind, an open enough mind to be able to see around square corners. What am I missing? You know, the why questions are really powerful. Why are we not doing this, or why are we doing this? I ask those questions a lot, and in the answers, you can sometimes tease out some real opportunities, some hidden things. But thinking creatively about opportunities and problems is really important.
And what about the industry generally? Do you think they have big challenges now as the defense budget probably comes down a bit?
So I think that we are all responsible and we have an obligation to find the latest and best technologies that we can for our customers and deliver them in the most cost-effective manner we can. And I think that that's a challenge and an opportunity for all of the big defense companies.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. weekdays.
The difference between endless research and a winning strategy. To improve your firm's productivity and profitability, Bloomberg Law combines the latest in AI-powered tools and in-depth analysis to accelerate the research process. To grow your practice and make better use of your valuable time. The difference is Bloomberg Law.
From the world of politics to the world of business, Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg.
There could be a growing split between what you might call American economic pressure on China, almost economic warfare, and Europe, led by Germany, looking to China in many ways to compensate for the loss of economic ties with Russia. If there were a crisis and the United States wanted to introduce sanctions, I could imagine a big transatlantic split.
Richard Haas of the Council on Foreign Relations, just brilliant yesterday on the linkage of our diplomacy, our foreign policy, with our domestic policy and the uncertainties moving forward. Lisa Bramwitz and Tom Keene with you. John Farrell on assignment. Denmark, Tunisia coming up as well. Futures up 8, Dow futures up 68. I'm going to call it just like stocks are open today. Futures are open. We'll see what happens. Yields come in a little bit, and Lisa, that's sort of the growth angst that's out there.
Yeah, and this concern about how far the Fed can go. Can I just say, you keep trolling John. You basically keep implying that he's like just ditched us to go watch the World Cup. So we'll find out. Hopefully he'll come back and give us a full report.
He'll give it, I'm sure, and a more intelligent report than we'll ever do. We know
100%.
That for certain. I like to say that my bracket is completely blown up with Argentina losing. It's sort of like, March Madness. I'm sort of out of it, like
immediately.
With the 64 in that. He has been so loyal. Enda Curran joins us now, Chief Asia Economics Correspondent. And I'm as guilty of this as anybody. I say I've been to China, and I've been from the airport in Hong Kong to the Mandarin, or, maybe some fancy Bund hotel in Shanghai. In China right now, it's getting serious. Chongqing is in Sichuan. It's 800 miles from Hong Kong. It is one of the 4 city-states of the People's Republic of China. Tell us about the quality of the COVID lockdown we see in inner China this morning.
Well, look, it's getting worse by the day, Tom. China's COVID cases are surging. We had a top health official, Sun Chunlan. She went to Chongqing today. She's the kind of Chinese equivalent of Dr. Fauci. Now, what the authorities are trying to do is they're trying to thread this needle about not enforcing mass widespread lockdowns that we saw, say, in Shanghai earlier in the year, but they're trying to do more targeted restrictions on the ground. It's not just Chongqing, also beside us here in Hong Kong. Guangzhou is the other epicenter of this outbreak. But obviously the question is asking, that the officials are obviously asking, is how are they going to do that? How can they control this outbreak without going to kind of draconian measures? So Nomura reckons around a fifth of China's economic output is now being hammered by the latest COVID restrictions and COVID testing that's going on. So it's all heading in the wrong direction for COVID zero.
Over the last 50 years, the city-state reality of China is that the mayors, the leaders, the generals, if you will, of each given city have a voice, and they're very powerful. Have they been quieted by President Xi, or can they give him an urgent response to, hey, this is what, is happening in our city?
Well, there was a recent plan delegating more kind of authority to the local level authorities, Tom, to your point, allowing them to respond to COVID as they best see fit. But of course, the instruction was also you're not to lie flat, and they have to continue to control the virus. So obviously, our own colleagues in Beijing and Shanghai are reporting. The question becomes, how can they pull that off? How can they allow the economy to breathe while also controlling the virus without kind of draconian restrictions that are being forced through? So this is the big dilemma. I think there is a feeling now among China watchers that China is heading into a very difficult few weeks. It's going to be probably the biggest test of COVID zero since the pandemic began. Nomura also out today making the point that China's hospital network in terms of ICU beds and the like isn't as good as your Taiwan's, your South Korea's and Japan. So there's a real critical a couple of weeks now facing China on this policy.
And here in the U.S., there also is a bit of a COVID wave, although there's enough immunity that people kind of shrug it off. And I do wonder, as people gather for Thanksgiving meals and prioritize getting together regardless of any health concerns, what the social unrest is like, the social pushback in China amid another round of shutdowns.
Well, look, again, as you well know, Lisa, it's hard to be too scientific, but open source social media does suggest there's a lot now of fatigue, exhaustion, and maybe resentment towards the ongoing COVID-0 restrictions. We had some analysts on Bloomberg TV today in Asia Hours making the point that people are fairly tired by the ongoing restrictions as it is. That's obviously understandable, but the whole crux of the issue is how does China navigate away from COVID-0 without having a fairly serious public health disaster on its hands? And that's the big challenging act here. How can they navigate to get the vaccination rate to where it should be, either with Chinese-made vaccines or Western-made vaccines? And then how can they, of course, keep the economy ticking over when you have an exit wave from COVID-0? And other countries in Asia who came out of COVID-0 went through a pretty rough time when they were pulling out of it in terms of worker shortages, supply chain disruptions, and everything else. So it's not going to be simple for China. A lot of economists today, Goldman Sachs included, were making the point that it's going to be a very slow, torturous process for how to navigate out of this.
That said, almost everyone who I've read believes that China will make its way out of this next year. This is the consensus trade that you will see outperformance in the world's second biggest economy because of how low things have been this year and because they have to start the process. Can you connect the dots and all the things that have to go right to get there to make sense of this consensus call?
Yeah, it's because expectations have been so low, Lisa. It's probably not too hard to see how China could at least recover somewhat from here. As you mentioned, if they can navigate out of COVID-0 in a somewhat controlled fashion, obviously the consumer will be ready to go, pent-up demand, just like we've seen in every other country around the world. Goldman Sachs thinking that will happen in the second half of next year. But don't forget the real estate side of it. Real estate slump, accounting for almost a quarter of economic activity. As we've said before, economists say that the recent measures to shore up the real estate sector are a game changer. So there is a scenario where we could get into, say, mid next year, where maybe China's navigating the COVID side of things better than it has been. Maybe the real estate sector has found its feet, and China's getting up and running again.
And thank you so much for your work each evening for us from China, and Curran running all of our economic analysis from Hong Kong on the Pacific Rim. I want to do a victory lap for one L. Abramo. It's Bramo killing it yesterday on the Equity Watch, a rare and difficult thing for her. Your interview with one Peter Oppenheimer really got some major traction out in the media. People talked about it as well. Ian Lingen in Bonds publishes moments ago, a plethora of unknowns is what Ian Lingen sees. And Oppenheimer sort of said the same thing in the equity space, right?
Which is a reason why they see kind of meandering performance for a while. But the meandering performance ends up leading to something where there are new highs later on in the existence of the stock market, but just not next year.
Does he participate in the market now, or is Goldman Sachs London in cash?
Participate in the market. It seems like there are pockets of opportunity. This is the consensus also, right? It's sort of, where is the leadership going to go? There's still areas that are going to perform. It's stock picking. It's not necessarily going to be a wholesale kind of catastrophic moment. He also pushed back against the Mike Wilson view that we could see 3,000 on the S&P. He doesn't see that as necessarily being in the cards.
Well, it's interesting, and we'll have to see how everybody recalibrates. I get the feeling they're going to recalibrate into this Tuesday, into Wednesday. They will not be recalibrating on Friday, although Lisa will on Friday. Please pay attention to Bloomberg Surveillance on Friday. Her guest for the entire Bloomberg Surveillance, Damian Sassower, long overdue on emerging markets into next year. The markets, the futures are open. Futures up 9, VIX 22.43. We're watching oil, Brent crude moving to 90, 88.58. Good morning.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
There's this downside of where we are, but there's also this incredible upside. People are chasing fusion. They're chasing green, blue hydrogen. They're chasing battery storage. Something's going to break through.
Bloomberg, your global business authority.
Good morning, everyone. Bloomberg Surveillance, Lisa Bramlett and Tom Keith. Thrilled you're with us here on an eventful Tuesday. Shonali Bastick scheduled to be with us, I believe, in the next hour. She and her team are working with Lydia Bayoud here on their important story on Bitcoin, on Genesis. We're watching that very carefully. Bitcoin, I'm going to say, and I'm speaking as an amateur, ugly 18 hours, comes back nicely, 15,800 on Bitcoin now, up 120 points. John Farrow is on assignment here. And Lisa, I think we're 30 minutes away from another game.
I think so, and people will be watching that one. And the last one was really good, actually. I was looking at some of the highlights. It was amazing, and it went for like 101 minutes or something because they get hurt and they have to play 90 minutes. I think that's the rule. So they play out longer. I think John actually took off specifically so he did not have to hear us talking about the World Cup, right? So he could just, focus on the game and people who know better than us. I'll give you a sense of what I'm watching today, just in terms of some specific companies and the earnings roll that has been going on. Best Buy coming out with better than expected earnings, sort of shocking because it was all online and now people are coming back to the stores to buy tech, to buy other things. They actually reinstated a dividend. They increased their dividend and they talked about operating income, meaning that it will be slightly higher than expected for the current fiscal year. You're seeing those shares up more than 7%. Zoom shares down sharply after disappointing earnings yesterday. They reported their slowest quarterly sales growth on record. They also cut their full year forecast. This really goes to the whole, are we post-pandemic? Are we ever going back to Zoom? You never were on Zoom.
I thought it was such a high point to have Dana Telsey with us, but you follow this more than me. It's highly idiosyncratic. Am I right about that or wrong?
It is, you mean in terms of the tech story?
Retail. No, the retail. Just the whole tech retail thing, it's just stock by stock right now, it seems to me.
It's about inventories and what people have done. It's about the mix of customer. It's about the type of product. Yeah. What the one unifying feature is that the discount stores have done well, right? We've seen that with TJ Maxx.
Sure.
We've seen TJ Maxx, right? Yeah. And we've also seen online not fare as well. Amazon not doing as well. Even Walmart, the online sales didn't do as well. It is in-store purchases that people are really going for.
Do you have the thing where you're in your living room and you go, Athena or whatever it is, Amazon?
Alexa.
Call Pharaoh. What's it called, Alexia?
Alexa, have you ever seen
Do you have one?
Yes, I do.
You really have one?
I genuinely have it. We've already gone over this. I occasionally ask it to tell jokes to my children so I don't have to.
Are you serious?
Engage. Oh, the other stock I was going to look at was Dell Technologies, not to shift the topic. Dell Technologies shares. What, that I have an Alexa or that I've asked it for jokes? Their jokes are actually so bad they're funny.
Here's a Bramo in the living room. what's it called? Alexa?
Alexa.
Alexa, what did the 7-year auction do? Right? They're going to get rid of it all. That's the rumor.
What, that they're going to
eliminate Alexa or
they're
whatever.
eliminating a lot of the staff tied to some of these issues. I don't know that they're going to eliminate that, but I will just say Dell is slightly lower after cutting their revenue
Is there
forecast.
other stuff coming out today? I mean, everybody's racing into Thanksgiving. I guess it's, you know.
You mean the earnings?
Yeah, earnings.
Yeah, there's some earnings coming out.
Okay, well, very good.
Went over them before.
Futures advance up 11 off that data check. There's no question about that. Dow futures up 80 points. We did that for Faro as well. In the spirit of Denmark, Tunisia, we had Jens Nordvig with us of Denmark. Of course, all of his good work in foreign exchange. And we now go broader to the Baltic Sea and East to Anders Pearson, Chief Executive Officer for Global Fixed Income. We make note Sweden is not in the World Cup, but then he will nod to Denmark here in a moment. What is it like, Anders? Explain to our American audience, particularly those that are not into soccer, you don't make it. Italy didn't make it. Sweden didn't make it. Is that a big deal, actually?
It's a big deal, yeah. No, I mean, I think any, particularly European country, but probably any country maybe outside the U.S., when your country does not make it to the World Cup, it's a big deal, and we have to quickly figure out what other country you're going to start cheering for. So
that's like the heritage.
I'm naturally, you know, of course, cheering for the United States, but Denmark is my second go-to here now when Sweden didn't make it.
Well, the heritage in Nuveen, that's really important because of his Chicago. The Chicago Cubs didn't make it for decades, so it's good to see as well. What is the 2023 view you have? Can you acquire bonds here for higher bond prices, lower yields?
Yeah, we are becoming increasingly more constructive on the bond market here as we're moving into 2023. I think our view is that the bond market is pricing in more and more of the uncertainty here, and more broadly, kind of the volatility and uncertainty we do expect to continue for the rest of the year. But as we move into 2023, when the Fed hopefully starts kind of slowing down their hiking, hopefully maybe wrapping it up, we do think that that's going to be a good time to really start legging in further into the broader fixed income markets. I think the spread widening could start a little bit here, and we could retest some of the wides perhaps, but the yield levels are very interesting. The income opportunities are very, very real. So while we're a little cautious near term, we're really focusing on that income generation part of fixed income. The vast majority of fixed income returns comes from income, as you guys know, not capital appreciation. So when you can have these entry levels for investment grade corporates at close to 5%, high yield at close to 9%, it's starting to become very interesting. And we actually think it's a bit of a sweet spot from a broader asset allocation compared to equities, compared to some other options as well.
A lot of people would agree with you, Anders, and I want to go broad and I want to sort of get existential because it's ahead of the Thanksgiving dinner and I want to board my kids with some bond existentiality. And there really is this issue where the Fed raised rates far beyond what anyone had expected. It didn't cause a massive blow up. It didn't cause a massive cascade of defaults like so many people had thought. And now we're talking to some people about potentially the best investing experience ahead that they could imagine in bonds. Can you square that? How the Fed could raise rates so much and not cause some real damage to a corporate debt sphere that blew up over the past 2 decades?
Yeah, I mean, I think I would say we can't count on that completely just yet. As we're sitting here today, yes, that certainly is the case, and bond markets and credit markets are holding up quite nicely. We still have, you know, the uncertainty of a Fed policy era. If they continue to be aggressive and too aggressive, that could change and could change quite quickly. That's not our base case. We're expecting sort of a mild recession next year, and we're expecting the credit market's going to hold up quite well. As I mentioned, we see a little bit of spread widening potential here, but we're not expecting a total blowout. But yeah, I mean, these are unique times and unprecedented times. I know we keep going back to that, and I think that's the part that the market is trying to handicap. How different is it this time, and how will this play out next year? But you know, ultimately, when we take a step back, we are finding the fundamentals are holding up okay. Obviously, they are deteriorating. Earnings are seeing some pressure, as you just touched on.
Yeah.
But it's not like things are falling off a cliff. And I think that's the comfort that we're seeing, that companies are coming into this prepared. They've pushed out the maturity wall. They are very focused on making sure that they're preparing for tougher times, which is unusual. Usually when you're facing a recession, it comes sort of out of nowhere, and that's the unique time that we're dealing with this time.
Anders, how much does your bullishness hinge on there being some sort of recession next year? And I say this because if there's not, then the Fed's going to keep hiking rates, and you're going to get that much more pressure on this space. How much are you counting on that?
Yeah, we are sort of counting on a mild recession next year. We don't think a soft landing, it's not impossible, but I wouldn't call it, at least my base case at this point. So there's going to be, almost like the Goldilocks will be some very mild recession that keeps the Fed comfortable that they've done enough, particularly on the inflation side. We sort of need to see the labor market having some cracks, not too much of a crack, but some type of crack. And that would be sort of the best case scenario in my mind, that we see a little bit of this slowdown in inflation, or a fair bit, let's call it, but not a complete fall apart at the same
Anders,
time.
very, very quickly here, the foundation, the heritage of Nuveen is municipal bonds. Is there value now in municipal bonds versus taxables?
Yeah, we're definitely finding a lot more opportunities on the muni side at this point. It's been a very challenging year. Flows have been very negative, but we take a step back. Credit stats are very, very strong. Risk reward, we think, is increasingly attractive. And munis, we think, is a good risk reward all in all. It should perform quite well in a variety of scenarios, particularly in a sort of moderate recession next year. So yes, overall, we find good value in that space.
Anders Pearson, thank you so much. We'll get you out here 20 minutes before the people to the west take on Tunisia. Anders Pearson of Sweden and Nuveen, thank you so much for joining us this morning. Lisa, this conversation coming up, folks, we're selfish on this. It's New York. It's on the edge of cold. It gets warmer the next couple days, but nobody has briefed us on New England, New York City, New York Harbor hydrocarbons like Stephen Schork.
Yeah, and the fact that there really has been incredibly low inventories of diesel, which you've seen that diversions between diesel prices and gasoline prices, and how much that's going to become an issue heading into the winter.
And this is about, it's not about, folks, the war in Ukraine, Russia, Saudi Arabia beating Argentina. It's about distillates and not in my backyard. Am I right on that?
A big part of it. Yesterday was really interesting. Did you see the price action yesterday with prices just plunging in the crude space and the Brent side of things, falling below $85 a barrel for the first time since September, on this Wall Street Journal report that OPEC Plus was considering increasing production, sort of a nod to the Biden administration. OPEC Plus came out, denied it, and now prices are flying upward. How much is that really the swing factor at a moment of real tenuousness about demand and supply?
I mean, come on. The swing factor to me is Enda Curran reporting on Hong Kong, on Chongqing. I hope I'm pronouncing that right. Excuse me if I did not. Seriously, 800 miles northwest of Hong Kong. To me, that has more to do with the oil noise than anything else.
Yeah, but this is all rumor and speculation. How do people get a sense of this? And I understand that, but my point is this is what people are trying to game out in some kind of material way, and there's no way.
God, Lisa lets the family secrets out. We were in a meeting, folks. This is like 18 years ago, and they're like, Tom, we can't call the show Bloomberg Rumor and Speculation.
I think we should. RNS.
It was shortlisted, but it didn't make it there. This is not Bloomberg Rumor and Speculation.
Sometimes it is.
Futures up 8. It's Bloomberg Surveillance. Stephen Schork, radio and TV next. Must listen for your heating bill in February. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. U.S. prosecutors had begun an investigation of FTX months before the crypto exchange collapsed. Bloomberg's learned that prosecutors in New York had started poking into FTX's massive exchange operations. It was part of a sweeping examination of cryptocurrency platforms with U.S. and offshore arms. The World Health Organization warns that millions of lives are at risk in Ukraine this winter. The UN agency cites damaged or destroyed infrastructure that has left 10 million people without power. That's about 1/4 of Ukraine's population. China reportedly is set to fine Jack Ma's Ant Group more than $1 billion. According to Reuters, that would pave the way for the end of a regulatory overhaul of the fintech firm. Beijing's crackdown on the private sector included the halt of Ant's massive IPO in 2020. Tesla is changing its marketing approach in China. That's in the face of fierce competition from domestic rivals and uneven demand. Tesla is now extending insurance subsidies of up to $1,100 for new buyers. Plus, it's even advertised on local shopping channel. Last month, Tesla cut prices in China for the first time in 15 months. Billionaire investor Carl Icahn holds a large short position in GameStop. Bloomberg has learned that Icahn began shorting the video game retailer during the height of the meme stock frenzy. That was around January 2021. Shares have lost 71% of their value since then. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
A multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
negative about the downsides from here. We just think there'll be more volatility and a trend towards a lower market level before we get that trough. The reason we're not quite so negative is because there are some positives. We do think that the US economy will avoid a hard landing.
Peter Oppenheimer, Chief Global Equity Strategist at Goldman Sachs, in an interview with Lisa Abramos with Worldwide Headlines yesterday. Really, really interesting on his tentativeness of getting into 2023. We're not going to waste any time here. John Farrell, keyed for Denmark, Tunisia. He is on assignment. We're unsure when Mr. Farrell will be returning. Bramo and I are here because we don't care. And here on a Tuesday with futures up 8. Here's what you need to know. Zydeco Pipeline was a phenomenal song by Aaron Neville years ago. Daniel Lenoir produced it down in New Orleans, and it is a key oil pipeline along the Gulf of Mexico. It is the focus now of our next guest. Stephen Shork is principal of narrowness and acuity on the hydrocarbon market at Shork Group. Stephen, let me summarize for our audience. We're up to our eyeballs in petroleum, and the price is going to go down. Do I have that right?
Well, in the near term, we certainly are a risk to the downside. So we had the market that switched into contango. This is the NYMEX WTI crude oil market. Contango meaning that the price this month is cheaper than the price next month. That occurred on yesterday's expiration in the December contract. Why are we in contango? Well, simply because, to your point, the Zydeco pipeline, which is a significant pipeline that takes oil from the shale patch in West Texas that's being produced and takes it to the export market in Houston. Well, there's maintenance now that's going to last well into December on that pipeline. Right. So your oil flows are lower, but you're still producing oil in West Texas. So if you can't move it into Houston, you have to put it somewhere. And it's very important as far as the NYMEX is concerned, because where that something is going to be is up at the NYMEX terminal complex up in Cushing, Oklahoma. So we're looking at a situation where we're going to be building supplies at the NYMEX terminal complex over the next weeks.
The surprise to me, Stephen, as an amateur, is West Texas Intermediate breaches $70. We get a 69 print on American oil. Is that in your realm of possibility?
Excuse me, yes, with regard to, now this was one of our more bearish cases. This is really at the tail end of our modeling of where we could go. But certainly I do expect to see oil find a base here, assuming we do not go into a significant recession. And we have to keep in mind, this is the Biden put, right? This is the level, $70 oil in the low 70s that the White House has said. This is the level we're going to start buying oil to refill the SPR. So if you're sitting there, why would you sell $70 oil when the United States government is going to come in and start buying 200 million barrels at that price? So there, in effect, without recession, is your floor in the market, Tom.
So what about the ceiling, right? Because we were talking about the tight market about, 2 minutes ago, and we were talking about how oil prices were going to rise beyond $120 a barrel on certainly Brent and close to that on WTI. What's changed so materially in the physical market to make that completely an obsolete argument?
Well, excuse me, absolutely. So the 100 to 130, which is where we were in the first quarter, second quarter of last year, that's unattainable. That to say that we can get back up there, but we can't stay there because that's where we saw the demand destruction. So that is short of something catastrophic happening in supply in the market. That market cannot go up and beyond that. So what has changed now, of course, is the weakening economies around the globe. So it is a near-term bearish picture at this point. As we said, the Russians are front-running the price cap, so they've dumped a lot of oil on the market. The refineries in Europe, fearful of that price cap, have bought all that oil. So you're having a hard time now selling physical oil. So a lot of this physical oil is getting rolled forward into the first quarter, which is going to keep the market supplied. And the fear now, of course, is COVID with China. Right. When is that economy finally going to reopen? There is some optimism that it can reopen fully by next summer, but there's still a lot of skepticism in that. So without that demand in the market, you've got this lowest scenario of oil prices, I think in that low 70, low 80. I think this is the bottom of the market. And therefore, we're waiting for the demand because think about this, CapEx is challenged. interest rates are moving higher. Your hurdle rates for CapEx are that much higher. So you're still looking at a market that's going to be a dearth of capital, which is not going to go, of course, obviously into bringing more oil to the market. So your long-term picture is still bullish. That still gets you back to that $100 range, but we just have to get over these short-term hurdles.
Could you foresee a time where you see the price of gasoline go down and the price of diesel stay high and even go higher?
Well, that's the new dynamic that we're in, Lisa, because right here in my hometown, Philadelphia, the once great epicenter of the East Coast refinery, we've lost 55% of our refinery capacity. So 3 years ago, we had a refinery in South Philly that produced or processed 330,000 barrels of crude oil a day. That was a lot of gasoline, a lot of distillate fuel that went right into our home market here in Philly. And then, of course, 90 miles up the Jersey Turnpike into Linden, New Jersey, in the New York Harbor market. We no longer have that. So that diesel fuel has to come from somewhere. And keeping in mind that gasoline is your best margin for a refiner. So this is where they maximize. So this is where you bring more gasoline to the market at the expense of distillate fuel, diesel fuel. So
Steve,
now we have to, yes, I'm sorry.
This is so important socially, Stephen Shorkin. You've been so dead on this. If we affect a shortage of heating whatever fuel in New England, in the greater Northeast, how do you perceive a government response of this? I mean, what is the linkage of not in my backyard to government regulation, investment, incentives to fix this problem?
Well, the short-term fix is for this winter is the Northeast Heating Oil Reserve, which you have 2 million barrels of heating oil sitting in tanks up in Connecticut, and Rhode Island, Massachusetts. And you also have that for gasoline, too. So that isn't, in fact, and I'm surprised we haven't seen that yet, because here in Philadelphia, 45 minutes up the Northeast Extension, Allentown was out of diesel. They closed down one of their gas stations up there because they were out of diesel fuel. So we are running shortages into this market.
Okay, but Stephen, again, I don't mean to interrupt. I was in Paris, and on the way out to CDG, there were lines I've never seen waiting for a gallon of gas. Are you predicting that for Allentown or for Albany, New York?
Well, certainly that is the risk. I think gasoline, we're going to be, we'll get through this because that's where the price incentive is. But with diesel fuel, we're already running shortages, and that was shortages, Tom, before we even had any sort of heating demand in the market. So we're looking at the Northeast, the Mid-Atlantic, New England markets that are 70% of the homes or the market heats with heating oil. So that is an absolute risk. That will continue all through the cold months.
Absolutely brilliant here. The Shork Report, folks. I can't say enough about it. Yeah, I've got the emails. No, we protect the copyright of all of our guests. See Stephen Shork of the Short Group for 5 pages every day of shocking acuity on the hydrocarbon market. Lisa, we come out of Paris. You go northeast. It's like 4 in the morning or whatever. We're getting United out. And the lines I saw were different. They were all trucks. It was all diesel lined up for miles at gas stations.
And we staved it off now, but could you see that in a couple months' time?
Well, the Shork's saying possible, I guess is how I would frame that. It's possible futures advance up 9 points. Stay with us. This is Bloomberg.
So as you look back on your career, what would you say is the best investment advice you've ever received?
Probably the best investment advice that I never received. but that I've lived my whole life around, is surround yourself with really good people. I thought about it just today, like I do many times, what makes a great investor? A great investment firm is comprised of people who are optimists and pessimists and realists. Because in the intersection of the debates that go across that wide range of personalities is where you find truth. It's part of the reason I'm so focused on freedom of expression. I see it in my own four walls, the robust and fulsome debates around how we commit our capital, what defines a good idea, what businesses to build or pursue. That's what drives the success at Citadel. And I've been very fortunate in life to have always had a group of friends who really push me, who make me better. And here I get to work with 3,500 colleagues who in their ways make me better each and every day. And collectively, as a team, we've had the opportunity to have an incredible impact on the financial landscape around the world.
Countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect. How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
Stocks can still lag from here, and it's not going to express itself regardless of what we're doing on the quantitative tightening in the bond market.
I think we, just like the rest of the market, are looking for a pivot to the next big trend.
2022 was essentially one big trade.
We're going to morph our concerns away from inflation. Prices will stabilize, and then we'll be thinking more about the recession.
I think 23 will probably be a rather muted total return year, but I still think equities will do better than bonds.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Treading water to Turkey Day, World Cup in the background. Welcome back. This is Bloomberg Surveillance. Tom Keene, Jonathan Farrow, Lisa Abramowitz on this day with a holiday-shortened week. It is a quiet week, except that it's not. And we've been talking about this all week. We get the 2023 outlooks. We also have some key data coming out tomorrow, including consumer sentiment.
Well, it's a data dump. I mean, basically, am I right in that we're squeezing Wednesday, Thursday, and even Friday into one day?
Exactly. Tomorrow's going to be the day on a week.
Confidence.
Right. That's actually what I'm most interested about, especially in light of what we were talking about with 20% inflation at the Thanksgiving table and people going out. How much is the conversation around the table not going to be Bitcoin, not going to be how do you get rich quick? How do you just basically survive in an environment that's really the tightening of the screws?
Yeah, futures advanced. We'll get to the data check on that, but let's rip up the script here. Michigan is something that's just sort of tossed out. People look at it, people don't. Lisa, the 5 to 10 year inflation statistic, nobody pays attention to this. 3%. That's not what Jerome Powell wants.
Jerome Powell specifically has said they pay really close attention to this and they care very much with the 5 to 10%, 5 to 10 year inflation. Well, we're not there yet, right? We've seen it kind of fluctuate back and forth. But what if you start to see it go up? What then? How does the Fed respond? What if you see sentiment plunge even more? Does that actually give
hold
on a second, but does that actually give the Fed a little bit of not comfort, but a sense that they can pull back, right? This is the reason why on the margins, this might matter quite a bit at a time when people are gathering around and kind of resetting. That's usually what happens during the holidays.
I'm going to reset. We reset for leftovers on Thanksgiving. I'm going to reset to the new home sales statistics at 10 o'clock on the 23rd tomorrow as well. But what we're really going to do is reset into that inflation report and the labor report, all of a sudden important first week of December.
How much can you actually start to see a labor market loosen up a little bit, right? They've wanted to see this, and we really haven't seen this yet. You talked about this, Tom, and I think it's an important point. Tech jobs, is that the tip of the iceberg? Is that an idiosyncratic story, or is this, something that is a tea leaf for what's to come?
Yeah, well, Ben Laidler was brilliant on this morning, and he was absolutely heated. The tech angst is way overdone. He says, look, Amazon is exiting 1%, maybe a little bit more of their employees, and they're hiring in key areas while they lay off people.
Yeah.
I have real trouble carrying the text angst over to the greater economy.
And talking about angst, we are seeing more shutdowns over in China, and it's not feeding through. Hold on a second, but it's not feeding through to markets because you are seeing a bit of a lift. You're seeing the NASDAQ up nearly 0.4%. The S&P, it's a little bit of a, no, but hold on a second. This is a little bit of a lift. And how much is it despite the negativity that you heard out of China, despite the fact that there's a bit of cold weather in Europe? There's a sense that people are kind of pushing fast past these things.
Yeah, I would mention 88.77 on Brent crude. Stephen Shork moments ago. Look for the Shork interview in its entirety out on digital. Maybe it'll get out on YouTube. $88.78 on Brent crude. I mean, I hung on every word that Mr. Shork said. There was a clinic on oil up to our eyeballs. Could you get under $70 a barrel? West Texas Intermediate up to the legitimate angst. I believe he said Allentown, Pennsylvania, with a dearth of diesel fuel this morning.
And we heard the OECD earlier this morning talking about the energy crisis really fueling a lot of what we've seen in terms of the inflation. On the yield space, you are seeing it come in just a touch, although still very deeply inverted yield curve. We haven't talked about this, but the gap between 2s and 10s is still staying around the lowest, going back the most negative since 1981, to give you a sense.
Well, we're going to recalibrate. Why don't you bring in Mr. Quinlan here? I'm sure he's done this before.
He's done this before.
He's looked to a new year before.
Joe Quinlan, head of CIO market strategy at Merrill and Bank of America Private Bank, joining us now. Joe, how do you recalibrate for next year given the complete lack of clarity?
Well, it's going to be tough heading into the new year, Lisa. We're looking at a recession here in the United States, shallow, first half of next year. Europe, I think, is already in recession, and China's flatlining. That's around 65% of world GDP. So it's a choppy market into 23. But we do think on the other side, say second quarter, third quarter of next year, we're going to be buyers of equities. We're going to reset here in the United States. We'll lead the way. But it's a chop and a churn as we go through the central bank tightening, pandemic in China, and recession energy-related in Europe. So it's very choppy.
How much does that really hinge, that sort of bullish call in the second half of next year, hinge on a quick deterioration in the economy and a quick response from central bankers?
Well, I think we're seeing the downturn in the economy. And I think if the Fed just pauses in January and February, not necessarily have to cut, that's kind of the green light for the equities to kind of to rebuild, put that base in for the next bull market. So they don't have to start cutting. I don't think they're going to be cutting anytime soon, but just a pause, let the medicine work, see how quantitative tightening is working its way through the economy, how the consumer's hanging in there. You talked about the labor market for sure. So I think we just need a pause to kind of build the bottom for the bull market.
Joe, the pause is there, and it hinges on inflation. OECD came out with an inflation call today where global inflation next year, again with all the angst in Europe, is 6.8%. Let's be optimistic. It's lower in America. I think we can do that, and Bank of America, no doubt, would lead on that. Michael Gapin and the rest. Joe Quinlan, does inflation actually come down enough next year in America?
I think it does, Tom. I really do, because you're going to see the productivity gains come back. You're seeing the economy weaken. Commodity prices have rolled over. When you talk to kind of the people in the energy patch materials, their costs are, their material costs are coming down. So I think I'm not in the deflation camp, this hard landing when it comes to having prices come down hard. But I do think we're headed in the right direction. And Europe, by the way, is going higher, as you mentioned. And Japan could be an outlier as well. So I think inflation comes down significantly ultimately enough next year that it gives the Fed pause and the markets a lift to look forward into deeper into 23 and into 24.
Well, okay, we get a pause and then we lift. Is it a lift with quality? I mean, Joe Quinlan, you've been known for decades with a comfort in quality ownership. Define what that is. Is it a free cash flow analysis? Is it a persistency of revenue analysis?
It's going to be core competencies, Tom. It's going to be brands. It's going to be good management. And I think it's going to be the global breadth that matters as well. You know, when the Fed is done raising rates, the dollar is going to peak roll over. So multinationals will have their day again, so to speak. We're looking for a second half recovery in Europe. Europe's a big market for U.S. multinationals. Reflation in China and the rest of Asia is going to help drive. So we're looking for large cap quality names to push ahead, whether it's healthcare, technology, financials, materials, industrials in particular. You know, Tom, we got a big story out there that we're not ready to talk about, and that's the rebuild of Ukraine. Now, it's too early to talk about that given what's happening there, but that's going to be very important for U.S. industrial.
Okay, well,
European
let's
industrial.
rip up the script here because this is hugely important. Focus Landau over at Deutsche Bank agrees with you as well. I get that for Europe. I get it for Germany, etc. How does the rebuild of Ukraine assist our viewers and listeners in America?
Well, remember, because U.S. corporations, they're more ingrained in Europe than they are here in the United States. You know, Caterpillar, Deere, big material companies, they have the plants already over in Europe, and they'll be right there on the front lines to help rebuild. So it's not like we're going to be exporting Caterpillar machinery. We're going to make it in Europe and send it right across the border. So U.S. companies are very well positioned to tap into that future demand coming out of the heart of Europe.
There's a lot of time before then, and as we look out to next year, one consensus has been a shallow recession. I know that that's what you were talking about as well. How do we know that a shallow recession isn't a new transitory?
That's a good question, Lisa, and we won't know until afterwards. But here's what I tell clients. You know, recessions, they're not, you know, we've had them before. They're not terminal. Here in the United States, recessions typically cleanse. We get, you know, we kind of shoot the zombies. We get the weaker players go under, the stronger players get stronger. Creative destruction. I mean, that's what's going to happen. So we're not going to know if it's shallow or not. And we do think it is because going into the recession, households are in good shape, relatively speaking, for corporations. Housing markets rolled over. We know that. So this is a recession that's well telegraphed and we're well prepared for. So that's kind of the backdrop for quote unquote shallow.
Joe Quinlan, thank you so much. Greatly appreciated. Of Merrill, Bank of America Private Bank as well. And we'll get all the different views from Bank of America here. As we do from all the other firms. I mean, you know, we make jokes about it, but this is really serious stuff, and particularly after this absolutely unique year, how do you recalibrate in the next year? I have no, you know, I get page 1 and page 2. As Peter Lynch would say, what do you write on page 40?
Well, right now, page 1 and page 2, there are a couple of themes that have emerged. Page 1, buy bonds, buy long-term U.S. Treasuries.
Yes,
that's number one.
I agree with that.
Number 2, we're going to see peak dollars some point next year. These are some of the consensus trades that people are talking about.
Years.
Correct. A lot of these have been wrong for a long time, right? The other potential consensus that you're starting to see around the edges is China being a potential outperformer just because of how much bad news has been baked in. These are some of the things. And shallow recession is also consensus, and that's also a question about whether that's actually achievable.
And that's always hazardous. I have trouble with that. What I will say, and I say this with a lot of force, corporations will adjust, they will adapt. You saw this with Disney yesterday. What's day 2 on Disney? I mean, he wrote a memo to the employees. What's he do? Go to Disneyland and enter the Magic Kingdom and do a photo shoot? I mean,
well, there are a lot of questions here in terms of streaming strategy, in terms of what?
The teacups at Disney. Disneyland in Anaheim is so much better than Orlando. Do you agree?
I have never been to Disneyland. I was at Disney World when I was 5, and I still couldn't do the teacups. I get motion sickness.
You just fall apart with the teacups.
Yeah, I don't really understand.
It's like what Walt wanted.
But you like the teacups? You like just spinning around?
I did a show once with a teacup spinning around. It was great.
Is that the other name of Bloomberg surveillance? Spinning teacups on Bloomberg.
Teacups are great.
Really?
Futures up 14. We're advancing. Dow futures up, John, 110. Great. Good morning.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Digital asset brokerage Genesis is warning potential investors it may have to file for bankruptcy unless it can raise money. Bloomberg's learned the firm is struggling to attract funding for its lending unit, which suspended withdrawals after the collapse of FTX. Genesis has spent the last few days seeking at least $1 billion in new capital. In China, an increase in COVID cases has led local authorities into reintroducing measures like expanding testing and lockdowns. It's now estimated that a fifth of the country's economy has been affected. That's despite the central government's call for more targeted, less disruptive COVID-0 measures. The European Union's executive is designing an emergency natural gas price cap. It's trying to avoid the kind of record highs seen in August without risking the security of supplies. The European Commission will discuss the final shape of the so-called market correction mechanism today. Best Buy has surprised Wall Street with an upbeat outlook. The consumer electronics retailer raised its profit forecast even as U.S. shoppers cut back on spending on discretionary goods. Best Buy also said that comparable sales are now expected to fall only 10% this year, slightly better than the previous forecast. And Societe Generale has stepped up its effort to eclipse rival BNP Paribas in share trading. The French bank has agreed to merge large parts of its equity business with AllianceBernstein. The two will unite their cash equities trading and research under a joint venture. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
What do Formula One cars and your local supermarket have in common? Well, strange as it sounds, they might both be using the same technology. A lot of innovation has trickled down from the world of high-tech engines, and it hasn't just found a new life in road cars. F1 cars have long been thought of as the peak of cool, and technology in them is also helping to cool down our produce aisles. Engineers from Williams are using their knowledge from 9 Constructors' Championships, working with company Aerofoil to help reduce the energy consumption of supermarkets. The device they're building is based on the design of an F1 car's rear wing. It attaches to fridges to keep more cool air in the unit. They estimate it can reduce supermarket energy consumption by 25%. One innovation from F1 is also helping hybrids reduce their carbon footprint. That's KERS, or the Kinetic Energy Recovery System. In common parlance, it's known as regenerative braking and works by storing energy of the car decelerating in a battery for later use. If that's not enough, F1 is now looking at TERS, or a thermal energy recovery system, looking to harness the heat produced from braking and the engine exhaust. That could allow cars to generate the same power using 30% less fuel. So while F1 may have a reputation as a gas guzzler, some of its innovations in the name of speed are helping in the everyday fight against climate change.
Lisa, you've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
From the world of politics to the world of business, Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg.
The difference between endless research and a winning strategy. To improve your firm's productivity and profitability, Bloomberg Law combines the latest in AI-powered tools and in-depth analysis to accelerate the research process. To grow your practice and make better use of your valuable time. The difference is Bloomberg Law.
See a sort of self-fulfilling or self-perpetuating wage price spiral. And if you think we're going into recession, as I think we are going into not only a European but also US and global recession, that's very negative in all sorts of ways. And sadly, people are going to be losing their jobs on the back of that. But we know from experience that does bring inflation down. Inflation is going to be coming down.
David Riley, huge value yesterday. Chief investment strategist, Blue Bay Asset Management. His comments on England were also important as well. They tee off here. England in the U.S., I think it's on Friday.
Yeah, it's on Friday.
John wants me to come below 59th Street. I don't know. We'll see.
Well, I think that both of you will be enjoying yourselves.
Mayor Adam may come with us.
Maybe you guys could phone in. You could call in.
Yeah,
we'll
Zoom
call
in. We can do a remote. That would be great. We'll have to see there. Right now we're watching Denmark, Tunisia, and they got to be sober. Don't you think it's got to be a totally different game after what the world just witnessed with the huge upset of Argentina?
I was going to say,
it's got to be a different game.
How much are we going to start to see the underdogs really start to make some inroads here? That's pretty incredible. Argentina was one of the leading candidates to win.
World Cup analysis here with Lisa Bramwitz and Tom Keene. It's a value add this morning as our futures up 17, a little bit of an equity.
Asking me.
Because I'm delaying to get to Isaac Boltanski. Isaac Boltanski with us, Ohio Wesleyan, which means he's encyclopedic on Ohio, which I'm told is one of 3 or 4 states that really, really matter in 2022 on to 2024. At BTIG Encyclopedic on the Inside the Beltway chat. Isaac, Ohio, how do you and Adapt adjust after what you saw in that Senate race?
Look, I'll tell you, I think there are many takeaways from election night, but one of the main ones for me, Tom, is neither Florida nor Ohio are purple states anymore. I think that we need to operate under the assessment that both of those are going red, and that really changes the electoral math for the next presidential election.
I strongly, strongly agree with you that the redder got redder and the bluer got bluer. What does it mean for a majority Republican House? How do they prosecute gridlock given the polarity that we learned about the first Tuesday of November?
Yeah, look, when we look at the composition of this new Congress, I think part of it is due to our primary system, right? And when you look at the House of Representatives, Tom, what I find interesting is roughly only 15% of those 435 seats were really competitive, which means that the rest of them were decided in the primaries. And frankly, that's not really good for governing. It's good for politics because both ends skew to the extreme, but it's not good for the actual governance of the country. And so that means we're going to have to look towards these deadlines. Once again, all of us have to focus on deadlines, whether it's spending or the debt ceiling, because those are the forcing mechanisms for legislating.
Meanwhile, we are looking at ongoing concern in the labor market, not with respect to layoffs, with respect to strikes. And I do want to bring this to you because I've seen a slew of notes and concern about this, a huge railway strike as the standoff kind of hardens with the Biden administration's outreach to them. How likely do you see some sort of stoppage in the rail system in the United States, given that this is really pervasive and it's gone on for months now?
Look, I'll tell you, there is real palpable concern in policy circles that we're going to have stoppages. And I would say this even, and doing my rounds on this, there's concern in policy circles that even you're going to start to see pressures in these marketplaces and ripple effects even before stoppages. And you have lots of folks around the country who are traveling, not to mention the goods and Christmas time and everything else that comes out of it. My contacts generally believe that Congress will be able to act here. There's a law called the Railway Labor Act. And that lets Congress come in to either impose a resolution based on what the president's emergency board submitted this past summer, or to basically punt and kick the can down the road to require operations as is for, say, 3 or 6 months. My sense is that you will get some movement closer to the deadline, in part because there's a Republican House, and that Republican House is not going to be nearly as friendly to some of these unions, and will most likely call for a reversion back to that plan in the summer, which was not as accommodating as some of the one-off union agreements we've seen since then.
There's a broader issue, Isaac. Earlier in the year, we talked a lot about the shift in power to labor, to the worker, to basically be able to demand higher pay, especially in light of the inflation. Right now, it's getting harder. We've talked about a bit of a loosening, a little bit greater slack in the labor market. From your vantage point, politically, is there also less willingness to allow labor to sort of gain the upper hand at a time when economic growth and, frankly, the mix of Congress has changed?
Yeah, so I think a great example when we think about this is the Biden administration's independent contractor rule, which came out and spooked some of the folks around these ride-sharing apps like Uber and Lyft, for example, or DoorDash. The Biden administration actually took a less aggressive stance in that rulemaking than some expected. Now, part of that's just due to the limits, but part of it's also they don't want to be responsible for driving up costs even further for the average consumer.
Isaac, very quickly here, we're running out of time, but I've got to go to this. There's Isaac Boltansky writing on something I never thought you'd write on, which is Congress doing something about targeted stablecoin. Are we actually going to get regulation to police this industry blow up?
So the simple answer, Tom, is we're not getting comprehensive reform anytime soon. The most that Congress can be expected to do with the crypto events of the past few weeks is to focus on something they kind of understand, which is stablecoins. Stablecoins look a little bit like money market funds, a little bit like deposit accounts. They get that, and that's something they can legislate on. The rest of it, I think that we are years away from a comprehensive legislative solution.
So instead of breaking the buck on a money market fund, you break the bit dog? Is that how this works? What is a stable coin?
Yeah, look, all that they are really pushing for, and they being Congress in this instance, is stability and transparency, ensuring that you have a one-to-one backup in these deals. That's it.
Okay, that sounds like my Thanksgiving dinner conversation, to stability and transparency. Isaac Boltansky, thank you so much. Been way too long at BTIG. Stablecoin, come on, Lisa.
It makes
like
sense.
The Doge.
I get it. Well, hold on a second. There basically is this concept like Tether, for example, that it's pegged to the dollar. So there's a sense that there's a direct relationship and there's some reserve. So it's not necessarily.
Worked out?
Well, you have seen it go below that, which is speculation that there is not enough in terms of what's been put aside to back it. And a lot of people push back on that. I don't know. These are big questions. It's unclear what's going to happen. It's unclear what the fallout is and how unique some of these crypto assets are from one another.
I think we're on our date calendar here at our world headquarters. Sonali Basak may darken the door with us here in this hour to give us an update on stablecoin. I can't say this with a straight face. Stablecoin, the Doge. Sonali was leading on the Doge. She was into that big.
Yeah, my kids were too. They were really into Dogecoin.
Are you serious?
Yeah, they were.
You let them do that with your allowance?
No. Like it was based on a game that they played, and you could get Dogecoin. I mean, that was part of the whole thing. Was
why is that different than what we're going through right now?
I mean, the sort of money that they have online in the metaverse that also is having.
There's a pulse on a Tuesday. Equities advanced, futures up 4, 5, 6, have become S&P futures up a good 0.3%, up 14 points. VIX comes in 22.28. Stay with us. Dana Peterson, chief economist at Conference Board, soon. Bloomberg Surveillance, good morning.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
There's this downside of where we are, but there's also this incredible upside. People are chasing fusion. They're chasing green, blue hydrogen. They're chasing battery storage. Something's going to break through.
Bloomberg, your global business authority.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Surveillance, Lisa Bramwitz and Tom Keene, John Farrow on assignment this morning here. Futures advance up 13, Dow futures up 110. The VIX comes in fractionally. Oil's what Lisa and I are following, 89.10. Lisa, we may get a 90 print on Brent crude. That's not a small item.
It's amazing how much it's just gone from one side to another. It was below $85 yesterday for the first time since September. Blink and you'll miss the move in oil.
What we're going to do, we got two guests in this section here. We're going to get to Dana Peterson with the conference board. Thrilled she could join us. But first with an update of the last 60 minutes on stablecoin. The unstable Shonali Bassick joins us now. What have you done the last hour and 15 minutes? Give us a window into the life of Bitcoin at Bloomberg.
Well, first of all, we reported that Genesis may seek bankruptcy if they can't find the money they need. They are still talking to folks across Wall Street who are getting a very intimate view into what the balance sheet looks like. So how do you finance the crypto ecosystem? You were asking about stable coins. There's a whole other thing happening where there's dozens of private equity firms looking at ways to onboard into private equity funds using stablecoin, which I heard you guys talking earlier is essentially backed one-to-one to the dollar or another fiat currency.
Are they looking to save Genesis, or not save, but are they looking to assist Genesis? Big, smart private equity money, big, smart hedge funds, and the major banks. Are they out there?
It's like anything else in distress. What do I get for my money? I
thought that this morning. I mean, they don't do a Warren Buffett convertible preferred, do they?
Nothing's over till it's over. That's the reality in this situation. Bankruptcy is certainly a possibility here, and if that does happen, there are plenty of people on the line that want that to happen because then they recoup some money rather than lose it all. So you see with FTX, for example, they had nothing and now they have $1 billion.
So what's the oxygen? What's the oxygen between stable coins and things that were more established and used for some sort of substitute fiat currency and Bitcoin and some of the other crypto assets that don't have the same kind of ballast?
On one end of the spectrum. I hear you guys talk about this a lot with the SEC, the Securities and Exchange Commission, the war in the United States that exists between the SEC and tokenization, the FTT token, other tokens.
Tokenization?
Tokenization. So are these assets listed as securities or not? That is the big fight between Coinbase and the SEC and many others. Then you have stablecoins, which are essentially, as you say, one-to-one with certain more safe assets. You want to see the reserves here. That's a big thing that people are really finally coming to in this industry. We want to know what's backing every single asset here, but it should trade one-to-one with the dollar if it's a U.S. stablecoin.
What's your sense in terms of the next development here of contagion? If you say you're midway through, or we're midway through whatever is happening in terms of this meltdown, what is the breadth of losses, the breadth of pain, the breadth of potential opportunity, given the fact that so many institutions are interested?
We were talking about this yesterday on radio for a bit. When Mt. Gox failed after 2014, what you had was firms like Fortress come in and buying Bitcoin claims at hundreds of dollars. And if that was the case and Bitcoin flew past $10,000, you're still pretty rich. And so is this an opportunity here to buy assets on the cheap? Remember, some of these assets are purely cash. Some of these are loans. Some of them are tokens, which to your point here, without that regulatory clarity, people are concerned about.
So part of this is they're trying to buy Bitcoin because they believe at 16,000 it's a value?
There are certainly people who buy that. There's certainly people who come on this show that are trading it on the side that'll tell you that too.
What a
And
morning.
we all know
Shanali Basak with us here till late tonight with her story with Lydia Bayud and our crypto team. Look for crypto on Bloomberg Television as well today. We migrate to something more stable, and that would be economics. Dana Peterson joins us of Wesleyan and University of Wisconsin Economics at Madison, and thrilled that she could join us this morning. OECD came out with a big fancy report. Dana, yours is more important. How have you tweaked your view for next year on real GDP?
Well, we think that the economy is probably going to be flat next year, and that incorporates a couple of quarters of recession. Maybe the fourth quarter of this year is a little bit negative, but really most of the brunt we think will be in the first quarter of next year, minus 1.5%, and then second quarter, minus 0.4%, and then kind of a moderate increase in the back half of next year. So all folding up into pretty much, again, flat growth for the economy.
How do you respond to what the Conference Board has seen over the many decades of when inflation spikes up, as a general rule, it's stochastic and comes down with quite a plunge, with great rapidity? Do you buy that we could see that?
Well, when I look at the components of what's driving inflation right now, a lot of it's rents, right? And then the other aspects are services, non-housing services. But when you look at rents, they're really sticky, and they tend to reflect what has already happened in the housing market. And we know that rents are difficult to come off because certainly people being pushed out of the new and existing home sales market, they're going to go into the rental market. So that means that we're probably going to have a period of time where rents are still going to continue to push up inflation.
Dana, how much do you buy this idea of a shallow recession?
Well, our own forecast suggests that, yes, the recession will be shallow. And indeed, along with that, you might not have a really big hit to the labor market. And a lot of that's a function of labor shortages. So if you have companies hoarding workers and still also hiring people, especially in those in-person services and other types of jobs where you physically have to be at work, that's going to support consumption. And so we may not have a really deep recession.
But that sort of is a bit of a bet on the fact that things will deteriorate quickly enough for the Fed to pause, for the lag effects to actually kick in and show us that there is some sort of active deceleration in inflation that gives the Fed confidence, right? I mean, without that, if there is momentum, how much does that really cast this idea of a shallow recession aside?
Well, I think the Fed is looking at the data, right? So already the housing market tends to react very quickly to interest rate hikes. And we're also starting to see consumers dial back their expectations for how many durable goods they're going to purchase, especially things that need to be financed. So the Fed is already seeing some of that evidence, but certainly there are lags, and it's not clear how long those lags are. But I would suggest that the Fed, still has some way to go in terms of raising interest rates, but that those interest rate hikes are probably going to be smaller than what we've seen.
Dana, I'm fascinated, and again, this is the heritage of the Conference Board, which going back to 1947 has always aggregated our economics. Are we so polarized as a society of the haves and have-nots that you can't aggregate your macro analysis as the conference board has done for decades?
Well, I mean, the good news is that even though we do have aggregates, we also look at individual income groups, especially with our consumer confidence
What do you see there?
data. Well, the youngest and the oldest groups are, a little bit more disgruntled than the folks in the middle, and certainly people who are at the lower end of the income spectrum are being hit harder by inflation. So we can look at those details there.
Please, Lisa, pick it
Well,
up.
I'm actually wondering
I'm just stunned there.
how much this has to do with home ownership, right? If the younger people are not able to get into homes and they're seeing their rents increase and it's absolutely prohibitive to go and buy a home for the first time because because mortgage rates are 7%, how much is that this distinguishing feature right now between the haves and the have-nots?
Well, it certainly is a distinguishing feature, but let's not forget during the pandemic, the biggest increase in home ownership was among the younger groups, right? The millennials, right? Because many of them, have children now, they have been able to get jobs and they've accumulated some savings. And certainly there were injections of cash from the fiscal stimulus. So that did help them, at least during the pandemic, those who got in there early to buy homes.
The millennials have their kids investing in Doge off their couch. I mean, that's how bad it is. Dana, I want to go back to what we're going to see here on the inflation guesstimate for December before the Fed meeting. Is that a mystery to you, or do you have some confidence in the conference board pick for what inflation will be before December 14th?
Well, we think that inflation is going to continue to ease. We probably reached a peak earlier this year. We're seeing food and energy prices come off, certainly in the last few months in terms of their contributions. And that's really important in terms of bringing down the aggregate level of inflation, and also things like utilities for people who, all the people who live in homes. But certainly we're concerned about, again, the rents and services prices continuing to rise and place upward pressure on inflation.
Dana Peterson, thank you so much. With the conference board, did she tell me I was disgruntled? I think that's what I heard there.
Well, I was just distracted. I did not let my kids put real money into Dogecoin, but they were really familiar with it from Roblox because I let them play a lot of video games.
16,000 exactly, up almost $400 on Bitcoin. I don't know what to make of it. It gets us, on radio, Matt Miller and Paul Sweeney will chime in, and then crypto on television this afternoon.
Conflating crypto and Bitcoin, I have learned, is perhaps a little bit of a faulty exercise.
I get a lot of mail on that.
And I think it's important to sort of highlight how much love we really do get. Coming up, we're going to talk about that love and also the road ahead as we try to chart something of a consensus into 2023. Barry Bannister of Stifel Nicholas, Nadia Lovell of UBS, Nuveen's Brian Nick, all joining us on the 9 a.m. show. Really, I'm curious how much people are looking to China as sort of the peripheral deciding factor, to your point earlier, Tom, not only with oil prices, but also global growth.
Oil up $1.73. Brent crude 89.17, going back up near 90 again. That's the back and forth that we've seen on oil today. Not much else going on. Yen with that move yesterday, 141, comes back a little bit with a stronger yen. Lisa, I do want to go to the 7-year auction. Seriously, we make jokes about it, folks, but actually I find the in-betweeny 7-year auction actually a lot more informative. Do we have auctions next week?
I think that is going to be on hold. I'm pretty sure. I will get that to you. I think that this week is the auction week. One thing that I'm watching, Abercrombie and Fitch, they did better than expected, which is surprising because you would think that marginal income would not go to your teenagers. But I'm just thinking that it's really interesting that the net sales came in ahead of what the expectations were. It highlights this point, this sort of bifurcated picture of retailer to retailer.
Over the years, has there been like 12 Abercrombie and Fitches? I think there's been like iteration of
Aeropostale, which is still exists. Like, who are you thinking of?
I don't know. What do I know about that world?
I don't know. Glossier, and you were talking about, what's the one where everything is too small?
Glossier, I think, has potential here, If you look at the lines out of A&F, look at the lines outside Sephora. There's the racket.
Oh, talk about a racket. But really good stuff.
We will see.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. U.S. prosecutors had begun an investigation of FTX months before the crypto exchange collapsed. Bloomberg's learned that prosecutors in New York had started poking into FTX's massive exchange operations. It was part of a sweeping examination of cryptocurrency platforms with U.S. and offshore arms. The World Health Organization warns that millions of lives are at risk in Ukraine this winter. The UN agency cites damaged or destroyed infrastructure that has left 10 million people without power. That's about 1/4 of Ukraine's population. Goldman Sachs is forecasting that the S&P 500 index and its earnings will see little change next year. The firm expects margins will contract due to upward cost pressures from wages, commodities, goods, and services. Goldman urged investors to own defensive sectors with low interest rate risk like healthcare and consumer staples. China reportedly is set to fine Jack Ma's Ant Group more than $1 billion. According to Reuters, that would pave the way for the end of a regulatory overhaul of the fintech firm. Beijing's crackdown on the private sector included the halt of Ant's massive IPO in 2020. And waiting times for Apple's most expensive iPhones are rising to what analysts say are record levels. And that's happening just as the holiday shopping season kicks off. According to Apple's website, U.S. customers who order today would get an iPhone 14 Pro delivered in New York on December 30th. The delays threaten to hurt sales and derail a rally in Apple stock. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Today.
NEC was started under President Clinton, and Bob Rubin was the first person to hold that job. Can you explain to people what it actually does and what the NEC does day to day? When, for example, who's in the NEC, who's on the NEC, what is your job actually to do?
So the National Economic Council, the job, the mandate, the mission of the organization is to coordinate economic policy across the executive branch and across the cabinet to make sure that the president is getting the benefit of when making decisions of his entire economic cabinet, and also that the economic cabinet is getting clear direction from the president as well. So that two ways. So it's a coordination function. On the NEC itself are all of the relevant cabinet members, the sort of core economic team, OMB, Council of Economic Advisors, Treasury, but also Secretary of Labor, Secretary of Commerce. My team, the NEC team, is a small team within the White House that is, our job is to do that coordination across the range of economic policy issues.
Now, you were the deputy in the Obama administration, the NEC, now you're the director. Which NEC worked better, the Obama administration one or the Biden one?
Well, on the issues that I worked on in the Obama administration, it worked very, very well. And the current NEC works very well as well.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it.
You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and
put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Countdown to the Close. Welcome to Bloomberg Crypto.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Going through an inflection point right now, like we saw earlier this summer. We're starting to see that shorter term signals and longer term signals are kind of at odds. And so I think we, just like the rest of the market, are looking for a pivot to the next big trend.
Catherine Kaminsky there with Alpha Simplex, a really great feedback from that yesterday on turtle trading, on trend following. Focus, she's up 40% this year, down from being up 55% or something like that, doing better than good on the trends this year, even though it's been a tough number of weeks. At any other time, I would pick up on that right away with one B. Ritholtz, Barry Ritholtz, with Ritholtz Wealth Management, important books, and the wisdom of decades on how not to lose money. Of course, Masters in Business gets huge numbers for Bloomberg in the podcast world. Barry, we are going to stop now, and this is without question my most important conversation of the week. You and I remember Executive Life is one example that in a 7% money world, they guaranteed 11% or 12%. There's always a yield hog out there permeating crypto, and I go to crypto.com, which is a sponsor of the World Cup in Qatar. We can get a calculated reward up to 14.5% per year on cryptos. We can get rewards, a stable coin reward up to 8.5%. Barry, it's the same old shell game. It's too good to be true.
So I have a vivid recollection during the pre-financial crisis when the 10-year was yielding 2.5%, 3%, and the securitized subprime mortgage sellers were saying, this is just as safe as riskless treasuries, only it's paying 200 to 300 basis points more. And I have a very vivid recollection of saying to someone, either you are going to win a Nobel Prize in economics or go to jail. There's nothing in between. And that very quickly unraveled and proved to be true in the great financial crisis. It's amazing that it's not even 15 years later and people fell. Instead of 300 basis points, hey, we're going to give you 1,000 basis points more. Risk and reward are two sides of the same coin. 15% guaranteed in a 0% world. It's not just fantasy. It's
even
fraud.
8%.
Right. It's just outright. It's outright absurd.
The underlying on so much of that, with great homage to Mark Pittman, who was a fabulous reporter for Bloomberg with that idiocy of 2007 and 8. Barry Ritholtz, the underlying there was something called LIBOR, or maybe a spread, LIBOR OIS. The underlying here, I would respectfully suggest, is the price of Bitcoin. Is this catastrophe we're seeing hinged to the price of Bitcoin or hinged to something else?
It's not the price of Bitcoin, it's the growth of Bitcoin.
What do you mean by that? Unit growth?
The price growth. We can guarantee you 15%, asterisk, look in the footnote, as long as Bitcoin is growing at 20% a year, which we know eventually comes to an end. It always does. It always has. It always will. So saying we're going to give you something guaranteed,
right?
But it's dependent on a highly volatile asset that has a long history of swinging up and down and going through these massive crypto winters. From day one, this was deeply flawed, but it appeals to people's sense of a magic money machine.
One of the magic things here, folks, is I don't manage money. Ritholtz does. Ritholtz has losses and gains. He has to justify every tick of the day. I take huge issue with media elites who go to billionaires and gazillionaires that got in on the floor, and even at 16,000 exactly, they're still in a profit mode. How do you perceive how much damage is out there? How many people have been run over by Bitcoin from 20,000 to 16,000, or dare I say if it breaks even lower?
So I think of Bitcoin and some of the other crypto as a single large cap stock. When Bitcoin was $3 trillion, what is it? An Apple and a half, 2 Amazons. It used to be 3 Facebooks, now it's 6 Facebooks. Yeah. So it's not an asset class like fixed income or equities or real estate. It's a pretty narrow group with a very, very deep narrative that had a lot of very, very strong adherents. The problem is the narratives have all broken down, right? DeFi, right? Decentralized finance turns out to be a fantasy because when trouble comes, the first thing people say are, where are the regulators? Where's Congress?
I cut him slack.
Who's going to protect us?
Am I wrong to cut Gensler slack because of the it's not audited, it's not this, it's not that, and it's foreign, it's offshore?
You know,
how do you regulate it?
The Securities Exchange Commission can regulate securities. How do you define Bitcoin as a security? It's an asset that trades, but is it a security under the legal definition that gives them authority over it? And arguably the reason Gensler hasn't wanted this in an ETF is there's no control, there's no audits, there's no ability to guarantee the safeguards of a trade the way we can with every single share of stock, pretty much every single bond that's out there. It's a very, very different regulatory environment because you have control. And the whole purpose of Bitcoin or other cryptocurrencies is decentralized, user-controlled, transparent, no need for regulators. And that turned out to be a fantasy.
Let's switch gears here for the last minute. Do your clients want to own equities into 2023, or are they scared, stiff, petrified?
So we have done a very good job on educating our clients over the years not to think in terms of days, weeks, months, quarters, but years and decades. Our clients don't care about 2022 or 2023. They're much concerned.
Even your bond clients?
Absolutely. They're much more concerned about 2030, 2035, 2040.
Oh, come on. I'm not concerned about 2040. Pharaoh is, but yeah, okay, I've got the Austrian 98-year piece.
They're concerned about their retirement, their generational wealth transfer, their philanthropy. Things like that don't matter quarter to quarter, year to year. They matter over the arc of time. Any given year in the market can be plus 20%, minus 20%, or worse. But there has never been a 20-year run in U.S. history where equities have been negative, and very, very few 15-year runs. So we've had a huge decade from 2010 to 2020, and then 20 and 21 were massive. After those sort of gains, you look at this year, this annus horribilis, and you have to just say this is something that you have to accept occasionally some drawdowns. The difference between equities and crypto is equities are a future stream of income. It's a discounted cash flow, whereas crypto is you're just hoping the price goes higher, and that's very different.
Hate mail already coming in. Barry Ritholtz, successful again. Thank you so much. Master of Business, I can't say enough about it. He really downplays it. It's like, oh, shucks, yeah, I'm doing a podcast.
Boaz Weinstein this weekend, spectacular.
What's he say? What's his major theme?
You know, he talks about the Fed, he talks about credit, he talks about not understanding where we are in the cycle and how costly of an era for traders that is.
And the cost there is a new risk-free rate. We'll talk to Ritholtz about that next time. This afternoon at 1 p.m., after our Genesis story this morning, Bloomberg Crypto. Jonathan Levin will be with him, Jeremy Allaire as well. Futures up 20, they advance. Bloomberg surveillance.
any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
From New York City for our viewers worldwide, I'm Lisa Bromwitz in for Jonathan Ferro. Right now we are seeing a little lift ahead of the Thanksgiving break. The S&P up about 0.5%, the NASDAQ up. Similarly, the countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Ferro.
Big issue, seeing more pain until the pivot.
There's still a lot of hawkishness yet to come and feed through from the Fed. Underweight in equities at the moment.
Stocks can still lag from here.
Another move down. I could see another 5-10% lower on this equity market.
How many more rate hikes will we get?
Waiting for that moment when the Fed is likely to pivot.
Pivot from Fed. Equity markets in general, I think, are fraught, until such time.
We've seen more positive signals.
But one good data point. I do think that, people are being a little bit too optimistic. You want to have another data point confirming that the disinflation trade is on.
Markets will increasingly be pricing in the impending downturn that's to come.
The playbook is you have to get defensive.
Joining us now, Nuveen's Brian Nick and Nadia Lovell of UBS. Pain until the pivot. Brian, is that your idea as well? That basically we need to see ongoing revisions to earnings, ongoing revisions to valuations until the Fed blinks?
I think that's right, and they made that pretty clear. I think the markets are really focusing on the fact that the Fed's likely to decelerate the pace of hikes. I think they're focusing less on the promise of more hikes into the future and maybe a higher terminal rate. So until the market gets that pricing right, it feels like it's going to be status quo, which for 2022 has been interest rates are going up, and they're going up by more than you think. And it's very hard for diversified investors to navigate through that environment cleanly.
So then becomes the question, how high is the bar for the pivot, or for perhaps the cutting of rates? Because the pivot is not just simply stopping on raising those rates. Nadia, what's your view?
Yeah, we think that is going to require inflation to really come down. The most recent inflation number is encouraging, but it's still too early to have a party. We think you're not going to get something with a 2% handle until the later half of 2023. And that's when the Fed might be able to take their foot off their pedal and cut. We do expect another 50 basis points in December, then another 50 in 2023. And we think that the Fed will pause in the early part of the year, but it will take a lot more to get a pivot. And the Fed is keenly focused on the labor market. So we also need to see the unemployment rate sort of tick up before the Fed will be comfortable in doing a rate cut.
And there's a lot of faith right now in the idea of lag effects, the idea that the rate hikes that we've seen this year from central banks around the world will start to really bring inflation down more sharply next year. The OECD not necessarily agreeing, raising its inflation forecast for 2023, saying, quote, right now controlling inflation has to be the top priority or we end up with a situation that inflation becomes so entrenched that the pain needed to control it will be even greater. Risks of overshooting are certainly less than risks of inaction. Brian, based on the lag effects, based on the tea leaves that we've seen in the housing market and other sort of first movers in response to the rate hikes, do you think that this is true?
I don't actually. I think that we're going to see inflation come down in the first half of next year pretty quickly for reasons that may not have anything to do with what the Fed's up to. We're seeing goods price deflation. It's about as powerful as we've ever seen. We're seeing energy prices, potentially also food prices, starting to roll over. So if those things that are sort of around the periphery of what the Fed's able to control start to cause inflation to moderate, start to cause real wage growth to turn from sharply negative, which it's been all year, to positive, that could actually be a bit of a tailwind for consumers who, yes, are going to have to face the lagged effect of higher interest rates, potentially less hiring going on, less negotiation for nominal wage growth in their jobs. But as long as real wages are coming up because inflation is moderating, I think we should see the consumer carry us forward at least into the second half of next year.
Which raises a question of whether we really can see the shallow recession, Nadia, that so many people are expecting, this idea that we can get some sort of, I don't want to say Goldilocks scenario, but a place where the Fed can really cut rates. Do you feel like there is more resilience that we're seeing in the earnings of retailers and beyond from consumers than to allow some of the lag effects to just take hold and inflation to really keep going up?
We do think that you can achieve a shallow recession next year. I mean, the consumer does remain quite strong. We're seeing the spending in retail earning this week and also in terms of retail sales. But, the consumer spending is shifting. It continues to shift away from goods and towards services. I think what's given consumer confidence in to spend is the labor market. The unemployment rate still remains pretty low at 3.7%. We're seeing, more layoffs in tech. And if that becomes more widespread, then we think that the consumer will be more concerned about job security and probably tighten their belt as we get into 2023. But the consumer balance sheet remains very strong, and so does corporate balance sheet. And the consumer does have a lot more fixed debt than it did versus variable debt than it did in the last financial crisis, and as does corporates. And so we think that because of the health of the balance sheets, that will allow for a more shallow recession than we've seen in the past.
And Veronica Clark over at Citigroup also pointing to next week's jobs data. Take a listen to what she had to say.
Next week, of course, we'll get a lot of labor market data. That will be very important. For the Fed right now, if we do get some slowing in inflation, which it seems like we might, but you're not seeing it in the slowing in service inflation, that's related to a tight labor market, and then you do need to see that loosening in the labor market data.
Nadia, from your vantage point, is the tech industry and how much we have seen the layoffs picking up there a sort of precursor to what to expect more broadly, or an idiosyncratic sort of mismatch in size and staffing based on the mismatch in expectations for certain companies?
I think that tech isn't reflective of the broader economy. And tech is really where the excesses were. Tech is a pandemic beneficiary, so there was a pickup in hiring, and now companies are trying to right-size that. There's still other areas of the economy that does continue to have labor shortages. I mean, we heard throughout the earnings season, particularly from some of the Air Force and defense companies, that they have lost engineers to tech companies. So now some of that can reverse, and maybe the hiring can pick up in some of those areas we've seen shortages. And so we don't think that tech is a broader look on the economy, but we do expect the unemployment rate to pick up. I mean, even the Fed itself in their forward projections is looking for a pickup in the unemployment rate.
Meanwhile, investors assessing the lag, what we've been talking about between monetary policies and the effect in the real economy. San Francisco Fed President Mary Daly weighing in. Take a listen.
As we work to bring policy to what we call a sufficiently restrictive stance, which
really in simple terms means the level required to bring inflation down and restore price stability, we will need to be mindful. Adjusting too little will leave inflation too high, and adjusting too much could lead to an unnecessarily painful downturn.
Joining us right now, I'm very happy to say, is Bloomberg's very own Michael McKee. Mike, so much Fed speak, a very similar message across the board.
Yeah, that's pretty much the case. I mean, Mary Daly laying out kind of the existential question, which begs the question of what is the right level for the federal funds rate. You know, there's an old saying, it's hard to make predictions, particularly about the future. The markets are predicting that the Fed's going to continue raising rates. They've got 50 basis points priced in for December, and then 325 basis point moves after that, and then they think they're going to cut. Now, the Fed doesn't think so, and their argument is we get to the terminal rate, and as Lisa said, there's more and more agreement it's going to be 5%, give or take 13 or 15 basis points. They're going to leave the terminal rate where it is for 12 to 18 months. Now, that's going to depend on what happens with the economy, and I think some of your earlier comments address that. The idea that we're going to now have to start paying attention not just to inflation, but to growth and unemployment. The OECD forecasts out this morning show the U.S. slowing to just 0.5% growth next year, which is a little bit stronger than the Bloomberg consensus forecast this month. And of course, the Fed hasn't made a forecast since September. They'll make one in December, so we can't really count them, but this is where they are. They think the OECD thinks PCE core rate will decline to 3.6%. Bloomberg economists a little more optimistic than that, and unemployment doesn't rise very much under the scenarios, but if it does the Fed have to react? Well, that means that you got to stop paying attention to what they're going to do in December and what they're saying now and tomorrow and the next day, and start looking ahead to the data that come out between now and, say, March or May, when the meetings are that they might end up with what they're doing. So write this down. You've got CPI coming out every month, middle of the month. GDP, the fourth quarter numbers come out at the end of January, the first quarter numbers at the end of April, and then these unemployment numbers. If we see deterioration in the numbers, then we're going to see the Fed perhaps start to change its tune. If we don't, then the Fed may hold where they are, and we'll see what we end up with, but we're not going to be able to tell people in the markets right now.
Michael McKee, thank you so much. Brian, Nick, and Nadia Lovell still with us. We are getting a host of data out tomorrow, in particular having to do with the housing market. Brian, I'd love your perspective on what you're expecting with that, given that we have seen the sales slow, but not necessarily prices decline as much as some people might expect.
Yeah, that's also because what the Fed's been up to, and they've been very clear about it since the beginning of this year, tightening policy has also impacted the supply side. So where there's still a lot of homes in the process of being built, there aren't that many new starts, there aren't that many building permits, the architectural hirings have gone down. So the leading indicator for all this housing construction have really struggled and are plummeting at some of their fastest paces we've ever seen. And that's because this sector of the economy is very interest rate sensitive. To the extent this is going to affect things beyond just the housing market, it's going to continue to hit the demand and I think eventually the prices for durable goods, the types of things that people buy when they move into a new home. If sales have slowed down, there just aren't as many people moving into new houses for the foreseeable future, you're going to see furniture, appliances, all the things that people use to fill those homes, the price of those things are going to continue to move down. So overall, the Fed is accomplishing some measure of sort of disinflationary, deflationary pressure, but they're doing it sort of a bank shot via the housing market.
Brian, when we head into 2023, what are you most confident in terms of some sort of asset class to hide out in?
I'm much more confident that fixed income is going to have a reasonably good year, certainly compared to 2022, which is not much of a bar for sure, considering it was the worst year we've seen.
Ever.
But I think if we're talking about the scenario next year where the Fed hikes rates to say 5.25, somewhere around there, and just holds them there, and the economy doesn't have a hard landing, and the Fed's able to keep downward pressure on inflation, that's going to be a pretty good year for fixed income. Not a great year, not a 2014, not a 1995, but if you're just clipping coupons at this new high and I think probably temporary level of interest rates, I think as a fixed income investor, you're going to be much happier. Equity markets, I think, are going to be more troubled by the Fed holding rates at that level, and it's going to be harder to see that kind of that slow grind lower in growth, causing companies to be able to sustain profit margins at the current levels.
Nadia, do you agree with this? It seems like increasingly this is the consensus, that bonds are a good place, at least safer bonds in the U.S. Equities, not so much in 2023.
Yeah, we agree with that for the most part. We think that that higher coupon that, investors can clip can help to have some cushion within the fixed income market. Within the equity market, we remain somewhat cautious still. We still think that the consensus expectations for earnings are too high. I mean, we have a market that's rallying into year end and sort of trading as if the economy is going to expand and PMIs are going to expand in 2023. We think that they're going to contract, and we think that, estimates at the very least is going to contract by at least 4%. And if we end up in a deeper recession, you could see a 20% contraction. So we just don't think that the risk reward is set up very favorably for the equity markets as we head into 2023. And we think that some of those lows that we have seen recently can be retested in the first half of the year. So we would be more in favor of the fixed income market at this stage versus the equity market. We think that investors will get a better entry point in the equity market in the first half of next year.
Nadia Lovell, Brian Nick, both of you are going to be sticking with us. Let's take a look right now at some of the stocks that are moving ahead of the opening bell. Here is our own Abigail Doolittle. Abby.
Hey, Lisa. Well, on oil's rebound after a wild ride yesterday around various headlines on OPEC Plus and a possible Saudi output hike, which was not true. We have energy stocks rebounding as well. ExxonMobil, Chevron, and Occidental all higher. Turning to retail, some positive reports out of both Abercrombie Fitch and Best Buy has those stocks higher. On the other hand, Zoom and Peloton, those pandemic darlings, well, not so much. Record low revenue growth for Zoom. That really tells the story, Lisa.
Thank you so much, Abby. Abigail, meanwhile, coming up, China's painful reopening threatening more economic strain.
We are not full on the China reopen trade right now. We still stay a bit cautious here, so we are still a bit underweight in the Chinese space.
That conversation is still ahead. From New York, this is Bloomberg.
Consumers are very aspirational. You've got millions of people riding motorbikes, and they want to be riding inside cars. Vingroup, Vietnam's biggest conglomerate, has really tapped into that. The founder and chairman aspires to be the Elon Musk of Vietnam.
Vuong is Vietnam's richest man with outsized ambitions. He wants to sell cars not only to the Vietnamese, but also Americans and other consumers around the world.
If VinFast is successful, that goes very well with the ambition of the Communist Party of Vietnam. But if they fail, it will be very, very hard blow to Vingroup and also to the national economy.
China reopen trade right now. We still stay a bit cautious here, so we are still a bit underweight in the Chinese space. However, if we would see a change in things, we would start to add onto the consumer side, where we think there's still potential for growth and also reopening to happen.
China COVID infections continuing to march higher, restrictions now weighing on a fifth of the nation's economy, fueling tensions at home as tensions simmer abroad. The U.S. pressing China to ease up on Taiwan. Defense chiefs have been meeting in Cambodia, are scheduled to. Bloomberg's Keely Lyons here in New York, and Josh Wingrove in D.C. joining us now. Josh, what's the latest when it comes to some of the tensions right now?
Well, we've seen the U.S. sort of roll out this sort of drumbeat of visitors to the Indo-Pacific region. Of course, Joe Biden was there last week. Kamala Harris, Lloyd Austin, the defense secretary, this week. And, you know, that bilateral meeting about a week ago with President Xi Jinping and President Biden really was a watershed moment in those U.S.-China relations, in particular under this president who has kind of, you know, talked a lot about having spent a lot of time with Xi Jinping, being able to sort of speak his language a little bit proverbially and see where they're going. So I think what they were trying to do is bring down the temperature. It seems that has been the case. The sort of mood music, if you will, out of that bilateral meeting has been pretty positive. And the question is, where does that go from here? They're sort of reopening channels that had been kind of dormant or, you know, slammed shut in the aftermath of Speaker Pelosi's visit to Taiwan. The question is how far that reopening goes, you know, and whether it can last. You know, has this all been a little bit of cleanup on Pelosi? At least implicitly, yeah, a little bit. And so, of course, the other question is, are there other visits that could happen to Taiwan, other members of Congress, for instance, that could sort of set off the Chinese in a way that Pelosi's visit did and sort of send us back to square one?
When you talk about reopening in morale or in relationships with Taiwan and China and the U.S., there's also the reopening when it comes to COVID. Kaylee, a lot of people talking about how there was a shift in tone from China in terms of perhaps easing off zero COVID. The latest cues, perhaps not as sanguine.
Yeah, it was relatively recently that China was talking about easing up on some of the most restrictive control measures. It was only about a week ago, and yet what we are seeing on the ground in the country now is a rise in the virus caseload. About 27,300 cases were reported on Monday. That is just shy of the previous record of 28,973, which was reached in April when the Shanghai outbreak led to a surge in infections. In this current wave, it's Guangzhou that is the epicenter with the bulk of infections. China's top health officials are vowing to stick to COVID zero. Beijing is telling local governments to implement those updated guidelines and not be excessive when it comes to controls, but still we are seeing these measures being put back into place. Nomura, as you mentioned at the top, Lisa, says roughly 20% of China's economy is currently being affected by restrictions. Even though we aren't seeing citywide lockdowns being ordered, about 48 cities are subject to some form of district level or widespread movement restrictions, and local authorities in big cities have also reintroduced measures like expanded testing and closing schools and offices. So as a result, Nomura says the path to reopening in China is going to be slow, painful, and bumpy, and they only expect GDP growth of about 4.3% in the country next year. No surprise, all of that has started to weigh on market sentiment. We all have been clinging to optimism about the reopening of this economy. Chinese tech stocks in particular, a really good example of that frenzy in the first half of this month. From the beginning of November through the 15th, the Hang Seng Tech Index rallied 33%. But in recent days, as the headlines have started to shift, we have seen some of those gains given back, now only up about 23% on the month. And of course, that's carrying through to some of those ADRs of those big tech companies that are listed here in the U.S., Lisa.
Kaylee Lyons and Josh Wingrove, thank you both so much. Brian, Nick, and Nadia Lovell are back with us. Nadia, from your vantage point, one of the key consensus calls heading into next year is that China will outperform based on the low expectations. In your year of inflection points, do you see that as a likelihood?
You know, we think it's going to be a bumpy ride in China. It's going to be volatile as the reopening process happens. It's going to take a long time. We're not really looking for any meaningful change in the reopening process until the third quarter of next year. We think it's going to be fixed and starts, and that's going to create some volatility. So we are neutral on China. We think as you get into 2024, then it can become more attractive.
So meanwhile, Brian, from your vantage point, do you see this as a possibly good thing or something that could be potentially problematic if China reopens more in full based on the demand side for commodities, in particular crude and natural gas?
Yeah, I think it's very difficult to try to identify silver linings from the situation, but there's no doubt that the China lockdown policies have had a disinflationary effect on global inflation. Inflation would have been worse over the summer. We would not have seen probably the decline in commodity prices, where most of the disinflation we've seen so far has come from. And so if these policies stay in place because the virus is still spreading there in a way that's unacceptable to the policymakers, I think all in all, that's going to be disinflationary. I think the initial fears were that this was going to disrupt manufacturing and cause supply chains to stay disrupted for longer. But two things are happening at the same time. One is companies are finding ways to reroute around China. And two, I think more importantly, global consumer demand for goods that are made entirely or partially in China is falling in its own right because people have rotated into services. So less of a big deal from a global economic perspective, a very big deal from a Chinese consumer perspective. But again, that is going to be putting some disinflationary pressure out there in the world, which is what really we need in 2023.
Brian, before I let you go, I want to put you on the spot because one thing that I keep hearing about is that we're going to head back down to near 2% maybe in 2024, 2025. Do you think that that's true in terms of the inflation rate in the U.S. and the developed world, or do you think that we're going to have a protracted higher inflation kind of regime for longer?
So I think that, it's going to be tough to get that last percent and a half down. I think all the forecasters are converging around 2.9 to 3.5% as the sort of the core PCE inflation for next year. And that raises the question of whether the Fed's going to accept that and say, well, look, mission accomplished more or less. We've gotten the bulk of the inflation down. I think at the end of the day, the Fed will probably swerve and try to cut rates back down to avoid a recession. Once these risks become more balanced between leaving inflation in low threes, high twos, and risking a recession because you've kept policy restrictive for so long, I think the Fed blinks in 2024, lowers the Fed funds rate, and we live in a somewhat higher inflation world, although not one that's going to greatly bother people as long as wage growth is at least as high or higher than inflation, which I think in the positive scenario that we're expecting next year is going to be the case.
Brian, Nick, Nadia Lovell, thank you so much for being with us, and happy Thanksgiving. Coming up, the morning calls, and later, Stifel's Barry Bannister seeing the silver lining, saying it's too late to be a bear. That conversation still ahead. Certainly too late to be a bear in today's market, with us stocks up ahead of the opening bell 6 minutes away. This is Bloomberg.
Okay, so you're moving in on me, quick, distracting me with your fancy hands. I'm going to deal with your knight because it's really bothering me.
Ah, my knight.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
Just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right. I will concede. I can see. You've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Countdown to the Open. I'm Lisa Abramowitz in for Jonathan Farrow. Time now for our morning calls. A look at some of the analyst recommendations on Wall Street this morning. First up, JP Morgan upgrading Toll Brothers to overweight, taking a more positive stance on U.S. home builders, with shares already pricing in a mild recession. Next up, Credit Suisse downgrading Blackstone to underperform its only sell rating on Wall Street right now, keeping a cautious view due to the challenging macro environment. And finally, Baird downgrading Airbnb to neutral, expecting inflationary pressures to weigh on future bookings and leisure travel spending. Coming up, we've got the market opening up. Stifel Barry Bannister joining us. This is Bloomberg.
Of a push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
The difference between endless research and a winning strategy. To improve your firm's productivity and profitability, Bloomberg Law combines the latest in AI-powered tools and in-depth analysis to accelerate the research process. To grow your practice and make better use of your valuable time. The difference is Bloomberg Law.
A multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Countdown to the Open. I'm Lisa Abramowitz in for Jonathan Farrow. Lift markets ahead of the open here on the holiday shortened week. S&P futures up by 0.5%. You can see NASDAQ trailing that up about 0.25%. And if you dig under the hood, you are seeing yields in just a touch. So this is sort of perhaps a bit of easing from how far those have to go. We are seeing 10-year yields at 3.78%. A little bit of dollar weakness, 102.63 on the euro-US dollar cross, and crude higher. It's just shocking to see some of the volatility in that space, up 1.4% to $81.10 about in the WTI figure after yesterday's whole whirlwind about whether or not there would be some sort of output increase from OPEC Plus pushing that back and saying not so quickly. Joining us now with a look at the stocks moving at the opening bell, here's Abigail Doolittle. Abby.
Retail earnings continue to come in, Lisa, even at this late date. And we have a lot of discretionary stocks that are popping, including Best Buy. Shares are sharply higher, up about 6.5%. This after sales fall about 11% on inflation, but it's the outlook that's more positive. Comp sales coming in, really outweighing that drop in sales plus negative color. Abercrombie also really soaring, up about 17%, a narrower loss, 5% sales beat. They also posted a better sales forecast. This is a real hot and cold retailer, but right now it seems like it's hot. Barry Bannister just talking about the short interest or the short squeeze out there. There is a high short interest on this stock. That could be a piece of it. And Urban Outfitters, another retailer beating. As for a puzzling one, though, Lisa, Dollar Tree, it's down 6.5%. The quarter was okay, but the fiscal year earnings now seen at a lower end of the range. Medtronic, an entirely different sort of a company. Its earnings, a med tech company, its earnings coming in weaker than expected, and really the outlook disappointing on slower procedure and supply recovery. And then finally, Tesla trying to eke out a gain, its first gain in possibly 5 days. This is yields are down, helping out tech. And speaking of up, Lisa, we have crypto up, Bitcoin, I should say, up about 3%. That's helping out the crypto space, including Coinbase, up about 3% on the session.
Abigail, thank you so much. Meanwhile, hedge funds cutting risk, seeing the stock bounce as a bear market trap. Vinu Krishna of Barclays writing, quote, current multiples are baking in a sharp moderation in inflation and ultimately a soft landing, which we continue to believe is a low probability event. Though we're likely past the inflation peak, it does not mean we are past the equity market trough. Joining us right now, Bloomberg's Katie Greifeld. Katie.
Lisa, you're right. Hedge funds have been strangely MIA from this recent rally. We have data from JP Morgan tracking long, short funds, and they've pared back bets in both books after pretty much being forced to cover their shorts in this latest bounce. You're looking at a basket of the most shorted stocks versus the S&P 500. As you can see, it's pretty much the same chart, almost there. That's painful for some of these short sellers, and that tepid risk appetite can also be seen in the options market. Let's look at open interest on both puts and calls. It has been dropping over the past few weeks. Of course, the trend is definitely higher versus this time last year, but starting to ebb again just in the last month or so, even with uncertainty building into year end. And Lisa, we haven't even talked about crypto.
Connection
Hedge funds
lost.
could be looking at billions of dollars stuck at bankrupt exchange FTX. We got a list of its 50 biggest creditors over the weekend. More than $3 billion owed. That is just amazing. Now, that list was redacted, but we know there could be up to 150 crypto hedge funds with direct exposure, Lisa.
And what the potential fallout from that is TBD. Katie Greifeld, thank you so much. Goldman's Peter Oppenheimer expecting the bear market to continue. Take a listen.
There is a lot of optimism now that the pace of rate increases is going to slow as central banks get a little bit more confident that inflation is closer to a peak. But that said, we don't typically get markets reaching a trough until interest rates actually start to come down, and we're still a long way away from that.
Bloomberg's Kaylee Lyons is back with us. Kaylee.
Well, Lisa, as we know, 2022 has not been a pretty year for the equity market, and it might not get prettier anytime soon. Granted, it has gotten maybe less ugly over the last, say, month or so as inflation data has come in cooler than expected, and we have seen somewhat of a rally. The question is, where do we go from here, especially looking into 2023? And still, the S&P 500 is down about 17% year to date, with, of course, losses far greater for tech stocks. The NASDAQ 100 is down more like 29%. And, of course, that is a result of higher borrowing costs. The 10-year yield is about 230 basis points higher today than it was at the start of 2022. And that, of course, is due to higher Fed rate expectations. That terminal rate continually getting repriced upward as the year has gone on, now up to about 5.2%. And we know that Fed speakers like Jim Bullard in recent days have said there's even upside room from there, and they might stay up there for a while. It is the higher rates for longer theme, and we have strategist after strategist saying until that changes and we actually get a pivot, it's going to be hard for risky assets to do well. Credit Suisse expecting muted equity performance in the first half of next year before we get past peak hawkishness and then a better second half. Bank of America echoing something similar. They see a potential bottom in the first half. And Marko Kolanovic, what used to be the Ultra Bull over at JP Morgan, says that until the Fed starts cutting rates, assets will be range bound with a more pronounced downside risk. And that is pretty much consensus for the year. If you look at the average year-end target for 2023 for Wall Street, 39.31 is what we're looking at. And where do we trade this morning, Lisa? 39.66.
Huge far cry. Kaylee Lyons, thank you so much. Stifel's Barry Bannister expecting a winter melt-up to fall victim to a summer slump, writing, quote, after an S&P 500 rally to 4,300 by April 2023, the Fed's overactivity now, with longs and variable lags, may just lock in a summer recession 2023. Anyway, Barry, I'm pleased to say, joins us now. Barry, we just heard a whole host of bearishness. We just heard all these people, even Marko Kolanovic over at JP Morgan, starting to feel bearish. You think it's a little bit too much. Why?
Yeah, we went into this year with a double-digit first quarter expectation of a decline, and we timed the three bottoms fairly well, but we did not time the two intermediate tops. You know, we had a top in the summer in June or August, and we had another top after April before that. Our view has been that if you look at the market in real terms, which is really the only way to look at it, inflation adjusted, the mean, the trend mean, and the median of the 13 bear markets surrounding recessions the past 90 years since World War II, it's 31%. And you know what? We fell that far, 31%, year to date through the October 16th low. So it is a little late to be a bear. We have to time the next recession. The market typically rolls over about 1 month before a recession. It peaks maybe 6 months before, but you notice the rollover about 1 month before. And I don't see a recession in the next 6 months, so we have a window of opportunity here for a rally, which we've been playing.
So how much can you play that? I mean, do you play that within specific companies based on earnings, based on forward looks, or do you base that just simply on a valuation?
No, Lisa, we look, you know, we view it as a trade-off between really two major groups, cyclical and defensive. And so within cyclical, having been dominated by defensives year to date, within cyclical, we do feel like the financials, even the semiconductors, tech hardware, housing, which is technically making a double bottom and looks like it would be the biggest beneficiary of a narrowing of fixed rate mortgage spreads, which are really blown out versus what they should be. And retailers, if oil comes down. So we have to watch oil really closely, but retail would benefit if oil comes down. And those are the ones we would play as cyclical over defensive. Small caps are included in that more cyclical profile, and that's where we have been in the last few months.
When you talk about small caps, the argument for a lot of people was that the U.S. was doing the best out of all the world's biggest economies, and that it would remain so, and it would also remain immunized from the strong dollar and the potential deteriorating effect on business outside of the U.S. That story is shifting as people talk about peak dollar, as people talk about Europe doing better, perhaps next year, and China as well, resurgent. How much do you buy that will be a new narrative where small caps will not do well next year?
Well, in specific to Europe and not so much small caps inside the U.S. and Europe are sort of two different questions, but specifically to Europe, I have been impressed with the fact that they've been able to adjust to a much higher average energy cost and higher labor costs. Europe is very much a coiled spring, poised to rise as the dollar tops, and I do think the dollar is topping. So I like international investing. Small cap is another beta play on this kind of cyclical theme. But international looks particularly interesting to me, and I'll be spending a lot more time on that. I plan to the next 3 months.
With respect to China, are you also one of those who thinks that that holds a great degree of opportunities just simply because of what we've baked into valuation so far?
China will eventually reopen. Okay, there have been some issues regarding their handling of COVID, having lacked mRNA vaccines and not purchased U.S. and European-made vaccines, which might have ameliorated some of their problems. But China will reopen. It will be bullish for global GDP. It will be bullish for cyclicals when it occurs. So I am thinking that they're inching towards that. But over the course of the winter, when virus cases typically surge in the Northern Hemisphere, I would be a little more circumspect that maybe the punch from China will occur more towards the summer and not so much immediately in the winter months.
Barry, we're talking about companies and how much they can be resilient into next year. And we're getting a slew of earnings, particularly in the retail sector today, Abercrombie & Fitch, Dick's Sporting Goods, a whole host of others. And it continues to show resilience. People are spending, people have the ability to do so, and they're upgrading some of their forecasts. What do you make of the optimism, the strange optimism based on expectations in retail that we've seen so far to date?
Well, it's not so much strange in the sense that because of pandemic savings combined with enormous government spending facilitated by the Fed and handouts to individuals and businesses, we built up $2.5 trillion of cash that has led down in the last several months to the high ones, so like 1.7 trillion of cash. People have the money to spend. They grumble about the inflation, but they have the money to spend. And that has helped keep the retail sales up. I expect that to continue.
So what do you think will be the returns, Barry, just to sort of sum up here heading into a tumultuous 2023? What kind of equity returns can investors expect next year, the year after, perhaps over the next 5 years on average?
I think most of the returns will be made in the first half, particularly through about April 30th. I tend to be on the cautious side. I'm looking at about 9 or 10% upside for the S&P, obviously more for the higher beta or the small cap trade. But I do see the direction is up. The recession risk is more late summer into the fall. And since a recession is a meaningful across-the-board decline in income production, sales, employment, and fixed investment, we have some spotty weakness there, but no one can adequately explain that we're actually having weakness across the board in those areas, particularly on the employment side. So we'll see the economy hold up at least into through the second quarter. We'll see about third quarter. That is some risk there.
Barry Bannister, you're sticking with us as we parse through how to navigate. Coming up, the crisis in crypto deepens, but how far is the reach?
I think the next leg of this is going to be, wow, what happens to the economy? You start looking at the amount of money that was being spent by even FTX on advertising, crypto as a whole.
That conversation coming up next. Right now we are seeing a bit of a gain as we see the first 12 minutes of trading, pairing though a bit, 0.2% gain, 39.58 on the S&P. This is Bloomberg.
The world like Bloomberg.
My team thinks 2023 we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
My grandfather got into the mutual fund business because the average investor could not get a diversified stock portfolio, and it was too dangerous to put, your entire savings in just a couple of companies. So the mutual fund was created to give a diversified expert management at a reasonable price. Today, we have a phenomenon where companies are waiting much longer to go public. And so in 2000, the average company went public after 3 years. Now, companies are waiting 9 to 10 years because there's so much money available in the private markets. As a matter of fact, there are half the number of public companies that there were in 2000, and there's 5 times the number of private equity-backed companies. So just from an investable universe, you look at the private markets, and it's significantly bigger. So the question is, that return that used to be captured in the public markets is now captured in the private markets. But the problem, as you know, is you're really tied up for a long time when you invest in a private equity fund. And so trying to figure out a way to solve the same problem my grandfather was trying to solve, which is how do you bring those returns responsibly, the democratization of the private markets to the retail investors. And I describe it as a bit of like running with scissors. Scissors is a great tool if you use it appropriately. And so we're focused on trying to figure out responsibly bringing it in to the average investor.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
Leg of this is going to be, wow, what happens to the economy? You start looking at the amount of money that was being spent by even FTX on advertising, crypto as a whole. I think this is going to feed into the economy. I think the wealth effect is real, right? This time we've lost $3 trillion down to just under $1 trillion.
Academy's Peter Cheer expecting further contagion from the crypto crisis. The fallout continuing with yet another brokerage sounding the alarm, Genesis, looking to raise funds, telling Bloomberg in a statement, our goal is to resolve the current situation consensually without the need for any bankruptcy filing. Genesis continues to have constructive conversations with creditors. This coming as FTX is expected to make its first appearance in a Delaware bankruptcy court today. Bloomberg's Sonali Basak has been covering all of this and breaking the news. Sonali, thank you so much for being with us. What's the latest here in understanding where we are in the crypto fallout?
Lisa, I want to bring us inside those continuing conversations as it pertains to Genesis, because as we've reported, they have reached out to a lot of players, larger and smaller, to try to really fill that $1 billion hole as it pertains to Genesis lending. Now, in the 6 days since they've halted withdrawals since last week, they have sought $1 billion or more of fresh capital, and they've warned those investors, as we've reported, that they would have to file for bankruptcy without new funds. Now, the reason Genesis matters so much to this industry, of course, is because it has a lot of institutional backing behind this firm, a lot of institutional counterparties. So all of a sudden, you're seeing that crypto contagion start to become a bigger issue potentially if you saw a bankruptcy filing from Genesis. Now, let's talk about FTX, because, of course, in a couple hours here, we have FTX starting that bankruptcy hearing in Delaware courts. Regulators around the world and its own customers are very interested in what will happen here. You do have a lot of detail already out there, more than $1 billion of cash that could be at play here. They have hired an investment bank, Perella Weinberg, to seek potential asset sales as well as recapitalizations of certain assets. And we know that they have the largest 50 creditors have billions at play here. The top 10 creditors, even more than that, tens of millions to hundreds of millions of dollars per counterparty at risk at FTX. Now, who gets their money back? Because at the end of the day, if you have $40,000 with FTX, do you get anything? Do you have any sense of recouping even a portion of those funds, or is the money saved for the big guys here? This will all play out in real time. We have never seen a bankruptcy like this before, but can anything of the past from prior financial bankruptcies play any role here? Wanted to just point out the contagion here. You're a bond girl, I'm a bond girl. Coinbase, of course, is not wrapped up in any of this, yet their bonds are trading at just over 50 cents on the dollar for notes maturing after 2030 here. Why? This is a company with $5 billion on its balance sheet. It is publicly traded. It is regulated in the United States. So you are seeing investor fears roll over a little more. How long that lasts for won't be answered until some of this shakes out.
Sonali Basak, great work. Really interesting there about Coinbase, given some of the skepticism about what other companies might have to become insolvent or face some sudden and serious pressures. Joining us, Barry Bannister of Stifel, who has been arguing that the crisis in crypto is more contained, writing, quote, there is wealth destruction, mainly the 20 to 30-something crowd who fell under the spell of decentralized finance and didn't understand the history of financial mania. Is Barry Bannister still with us? Is that what you would call this? A financial mania that is bursting?
Well, I think obviously blockchain has tremendous potential, and decentralized finance is one means to get there. But if you, as I do, I spend a lot of time on financial history. If you look back in the past, for example, the wildcat banks of the 19th century, many of these banks that were not regulated adequately failed. And so what's going to happen right now is they're going to have their moment of failure. They've got commingling of their own trading accounts with customer accounts, which is absolutely verboten in the traditional finance industry, and they need to be subject to those rules. They need SEC regulation. But once they get that, there are a lot of great potential outcomes in the DeFi industry. But the good thing about DeFi is they held themselves out as separate, and so they're not as connected to the rest of us, and there's not a lot of spillover other than the wealth effects.
Well, but what about the brokerages, right? The companies like Coinbase, like even the Wall Street banks that have built out trading desks specifically for crypto assets that might not be a part of the decentralized finance kind of world, but something that is more of a speculative instrument. Have we seen the entirety of that fall out?
Well, as you know, after the Dodd-Frank Act, prop trading pretty much went away. So the exposure of the capital accounts of Wall Street banks is minimal because the trading activity is not going to spill over. But yeah, there's wealth destruction, and it does have a small...
I think that we've lost Barry Bannister of Stifel. Thank you so much for that. We have been talking about banks really being immunized because of how much capital they've had to hold and some of the new regulatory actions that have been passed post-2008. Let's get to Abigail Doolittle, who's looking at some sector price action this morning. Abby, what do you see?
Well, Lisa, you know, it's really interesting because we do have stocks off their highs, up 0.3%. Would you be surprised to know that is on volume that is 32% below the 20-day average? Of course not. It's Thanksgiving week, so of course it's very small moves here relative to the volume. But some bigger moves for some sectors, including energy on oils, bounce back up 1.3%. We also have utilities up 1.2% with yields going down. Those dividends look better. Flipping to the bottom of that board, tech, though, interesting, the yields down is also lower. Those three mega cap sectors probably has to do with China tech still weighing through to U.S. tech. Let's focus in on energy, though, because the big story on the year, energy, the only sector of all 11 S&P 500 sectors higher, up 65% after rising 47% last year. Well, again, it's today's best sector, up 1.3%. We also have the XLE up about a commensurate amount. Some of the individual players, though, Lisa, they're up just a little bit less, up 0.6%, and Schlumberger, the driller, up about 0.5%. This continues to be that area, though, Lisa, that investors are hiding in this year. Again, all 11 sectors, or 10 of the 11 sectors down, energy higher. Every portfolio manager and strategist that seems to come on Bloomberg Television talks about energy being the place to be.
Yeah, indeed, Abigail. Thank you so much for that. Right now, in markets more broadly, you are seeing that lift fade just a touch as people parse through Fed speak, as companies buy back their own shares, pick up whatever technical reason you want. You're seeing the S&P now up about 1/3%, the NASDAQ down a little bit less, yields slightly lower. There's stability in yields, which is one precursor for a lot of people. Dollar weakness really building on what we've seen over the past few weeks, feeding these feelings that perhaps we see peak dollar next year. Coming up, the market-moving events that you need to be watching. That's next in our Trading Diary. This is Bloomberg.
Is there still room for Abenomics to be carried out in full in the way that Shinzo Abe imagined it?
The economic situation that Prime Minister Kishida faces today is very different from the one that Abe Shinzo was faced with when he became Prime Minister 10 years ago.
Does Japan need a new policy? Is that what Kishida has to learn, or are there parts of this that he should hold on to?
I think there are probably parts that he should hold on to. I think the main challenge which Japan faces is demography. The population is declining, rapidly aging. Women are totally underused in the labor force, especially educated women. One needs to think about increasing immigration. These are issues that Abe tried to address, but a lot more needs to be done to quote-unquote revitalize Japan.
Time now for the trading diary. You need to be watching this week. Before we get there, we are seeing a lift in the S&P. Interesting, the NASDAQ has lost steam, down about 1/3%. The Russell up about 20 basis points. We're looking also at bond yields coming in just a touch as we look at some stability there after a really tumultuous year. Taking a look at that 10-year yield, we started the year at 1.5%, 3.77% now. The White House briefing, we are things that we are watching today, 11:30 a.m. Fed speak continuing with Mester, Bullard, and George, all on deck for today. Fed minutes out on Wednesday, followed by a host of data, the data dump, including initial jobless claims, new home sales, U.S. PMIs, and the University of Michigan Consumer Sentiment Survey. And finally, U.S. markets are closing for the Thanksgiving holiday on Thursday. Good luck with Friday kinds of office activity. It is a time to clean out the office or just take time off in the United States to be with family. This was Countdown to the Open. This is Bloomberg.
Consumers are very aspirational. You've got millions of people riding motorbikes, and they want to be riding inside cars. Vingroup, Vietnam's biggest conglomerate, has really tapped into that. The founder and chairman aspires to be the Elon Musk of Vietnam.
Vuong is Vietnam's richest man with outsized ambitions. He wants to sell cars not only to the Vietnamese, but also Americans and other consumers around the world.
If VinFast is successful, that goes very well with the ambition of the Communist Party of Vietnam. But if they fail, it will be very, very hard blow to Vingroup and also to the national economy.
Enjoy the excitement of a night of music at Boston Symphony Hall with BSO Now. Watch brand new Boston Symphony Orchestra performances, behind-the-scenes storytelling, and memorable archival concerts, all from the comfort of home. Use our free 24-hour trial and see why the Boston Globe calls it musically rewarding, and the Berkshire Edge says the orchestra has never played better. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
When innovation strikes, Bloomberg Technology is there with the news and analysis you need. Every weekday, only on Bloomberg.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Countdown to the Close.
Welcome to Bloomberg Crypto.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Businessweek about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in sari stores every day, also on TV, radio, newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with Number Fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for Number Fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the NBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees. But for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired 2 consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard In America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113A also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as a coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. and it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic they had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack of the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be a ploy by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker but pretending to be a foreign person.
Federal investigators have detained 1 man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Venegold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Venergold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Venegold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Venergold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why. He may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Venergold as an opportunity to leave that troubled home. Venergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Venergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Wienergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Wienergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.